Welcome to the European Market Open, everyone. A minute to go until the start of cash equity trading. I'm Francine Lacqua here in London, and these are your top stories. Slumping recovery. Chinese manufacturing unexpectedly contracts in July and services weaken, highlighting the fragility of the nation's economic rebound. Powering through, HSBC profit topples estimates propelled by rising interest rates, while the lender commits to restoring its dividends to pre-COVID levels and shares jump in Hong Kong. Plus, Kashkari the hawk, the Fed dove, Neil Kashkari, says the FOMC is committed to slowing inflation to its 2% goal. U.S. futures dip, Asian stocks push higher. So let's take a look at the futures. And again, let's go back also to what we saw in Asia. It's very clear that the risk of a recession has cooled expectations of how sharply the Fed has to hike rates to tame inflation. Now, that spurred a July rebound in stocks and bonds. Remember, it is August 1st, so happy August, everyone. European stocks futures a little bit on the downside, but again, nothing huge, so we could see a bit of volatility. It is also the end of the earnings season. Investors on the geopolitics front, of course, monitoring the U.S. House Speaker Nancy Pelosi's trip to Asia. A statement from her office skipped any mention of a possible stopover in Taiwan. Then we look at some of the currencies. British pound 121.93. The Australian dollar, of course, that's a commodity story. Euro 102.32 this week. It's all about the Bank of England. They could join 70 other institutions in hiking interest rates by 50 basis points. What does that does for a pound, and of course, the repercussion this could have also on who will lead the Conservative Party is huge. And then I'm looking at commodities, iron ore gaining a touch with Brent pretty much unchanged, gold 1,763. So let's also look at the cross-asset check to have a look at what we're seeing, for example, for the U.S. 10-year yield. It was extremely interesting to hear Kashkari once again reiterate that the Fed will do whatever they can and whatever it takes to keep inflation under control. 2.6631 is the U.S. 10-year yield. And we're also seeing a bit of pressure for these S&P futures down 0.3%. Certainly here in Europe, but different in the States, but here in Europe, a lot of people on holiday for their summer beach vacation, certainly in Southern Europe. So maybe we see a little bit less volumes than usually onto some of the European bourses. Now let's also go over to the Bloomberg MLive managing editor. He's Mark Cudmore. Mark, good morning. And you're looking at the July stock rally.
Yes, good morning, Francine. Did you say whatever it takes there? I think you want to be on your Southern European summer holiday as well. But I do think the Fed will have to do whatever it takes to get inflation under control later on this year. And at the moment, the yield pricing over the next 18 months in the US is completely and utterly wrong. I have conviction in that view. I just don't have conviction when it gets challenged. I thought that we'd see bonds rally this summer, and I think it can go for a bit longer. But I am worried about how quickly it's happening, and therefore I'll be alert for it to be changed back to the underlying trends of 2022. And that is, we have an inflation problem that's not under control. Now, this chart is US financial conditions mapped against the Fed basis points move, or Fed policy rate. So the main chart, the green and red line, is financial conditions. When it's in green territory, US financial conditions are easier than neutral. When they're in red territory, they're tighter than usual. So at the moment, they are slightly tight. But remember, we've got the most extreme inflationary environment in more than 40 years. And what's really interesting is they're now not as tight as they were when the US Fed hiking cycle began back in March. So we've done all these rate hikes, and yet financial conditions are still not very tight. And that's because we've seen this exceptional stock rally, we've seen the bond market rally, we've seen yields come lower, we've also seen credit markets really rally, and that is a really, really key point here, input into the financial conditions. And we're seeing data hold up okay. So at the moment, conditions are nowhere near tight enough to stifle the inflation problem we have in the US, and that means that we're ultimately going to get many more rate hikes than are priced. When will we trade that narrative? Maybe not for a couple of months, but I think you want to be alert to it this week with Fed speakers on the agenda and jobs data at the end of the week.
Yeah, Mark, thank you so much. Mark Cudmore there, our managing editor for Bloomberg M Live. And I have to say, going back to the Kashkari comments, he was speaking, of course, to the U.S. press over the weekend. And he says, look, faster cost of living increases are becoming more broad-based and are not limited to just a few categories. And that's why he says it explains why the Fed is acting with such urgency. Now, China's factory activity contracted unexpectedly in July, and property sales continued to shrink, highlighting the fragility of the economy's recovery. Now, that's as the government sticks to its strict COVID-0 approach of tightening restrictions when virus outbreaks occur. Enda Curran, our chief Asia economics correspondent, now joins us with the very latest. Enda, thank you so much for being with us. What's happening in China?
So, surprise contraction in the official PMI, Francine, back to 49. Quite broad-based weakness from the biggest manufacturers to the smallest. Hints of weakness in both new orders and production. And there's a feeling that this goes beyond the kind of supply chain snarls that we all know about due to China's restrictions and lockdowns, and now actually speaks to a weakening global demand story. And that's potentially another headwind for China, given how important exports have been for keeping the economy ticking over. And as you mentioned, of course, we're now getting this surprise reversal in manufacturing at the same time that the real estate sector hasn't yet hit a bottom, and we had more negative data on that today with 100 top developers saying that sales continue to decline. So taking the two together does show the headwinds for China's economy going into the second half of this year remain quite significant.
Is there something that we're expecting policymakers to do to support the Chinese economy?
Well, all the recent indications we've had from the top level of the government, from the Politburo last week, Francine, has been that they're somewhat sanguine with where the growth story is. They obviously want conditions to be stable, but they're not going to give up COVID-0 and the health dividend that goes with that, in return for just juicing economic growth. We haven't seen those indications of the kind of massive stimulus we've seen in past downturns, but nonetheless, the authorities are there. They are, for example, increasing their spending, the pace of spending on infrastructure. The central bank has been supporting the economy at the margins. It's just not broad-based. Of course, this surprise in the PMI does indicate that perhaps the recovery from the Shanghai lockdowns was shorter than expected. So if we get more data sets like this one, then there will be more pressure on the government to respond by putting more support into the economy.
And thank you so much, as always, Enda Curran, our chief Asia economics correspondent. Now joining us is Emmanuel Ko. He's head of European equity strategies at Barclays. Emmanuel, thank you for joining us on this Monday, the 1st of August. I can't believe we're in August already. What do you take away from the earnings season so far?
Hi, good morning, Francine. Well, I mean, demand is holding up. I think that's probably the key takeaway for now. And earnings have not been the disaster some were predicting. So we've seen clearly the kind of maybe the quality of the beats weakening a bit because margins are under pressure. But the top line driver is still very strong. So you have a mix of very resilient pricing. So corporate have pricing power, they can pass on the increase in costs they had, but although the consumers' end demand is quite resilient, so volumes are the biggest contributor to the resilient earnings. But again, if you look at the details, look at margins in particular, they are softer, and the guidance, the company's commentary about the outlook are reflecting significant uncertainty. But clearly the bar was not very high. It looks like those numbers are kind of sufficient to drive a bit sentiment these days.
Emmanuel, I know there's been a lot of discussion on whether we're in a recession, technical recession or otherwise in the U.S., but overall, how much does the Fed need to step up its fight against inflation to keep it under control?
Well, we think there's quite a lot to do still, and to some extent, the move we had in the last couple of days is counterproductive for the Fed because by maybe giving the impression that we are close to neutral rate, I think Chairman Powell misguided the market and gave the impression that, yeah, the job is done and now the market can be a bit more comfortable with what the Fed is going to be doing. You've seen in the last couple of days, and this is what Mark was saying earlier, you've seen quite a bit of easing in financial condition everywhere. You've seen equities rallying, credit spreads tightening, dollar coming down. And I'm not sure this is what the Fed has to do to get inflation back under control. So our view that the market has to get back to reality. There's still a lot the Fed has to do to get inflation back under control. And at the same time, we are seeing more evidence of growth slowing into Q3. So that's not a great growth policy trade-off in our view.
Do you think actually the Fed can prevent a hard landing at this point, Emmanuel? And what does it mean for U.S. equities? I thought it was extremely interesting hearing from Kashkari, explaining the fact that this inflation is now much broader based, which suggests that they will have to do more.
Well, I mean, this is our view that whether they can do it, whether they can exit this dilemma with a soft landing or not is yet to be seen. But to me, the key objective of the Fed is very much to get inflation back under control. And we're still a long way away from 2%, right? So, again, we probably need to see more pain in the economy, in the labor market in particular, maybe more tightening in financial condition for the Fed to be more comfortable with the direction of travel getting 2% inflation, right? So obviously that it's way too early to relax on this inflation angst, and we think the Fed has to do more to get the job done.
Emmanuel, the Italian 10-year yield falling below 3% for the first time since May. Looking at all the market moves that we had in July that were, pretty big moves or some unusual moves, what do you find most unsettling?
Well, I think the ongoing correlation between bonds and equities is unsettling because equities are behaving like a bonds, basically. So the bullish projection in the equity market in the last couple of weeks has been completely driven by falling bond yields, which makes sense to some extent because most of the pressure on equities this year came from rising yields pressuring multiples. But ultimately, if growth is slowing because central banks are pushing hard on the brake, it makes kind of sense to be in bonds. And bonds have been repricing quite a bit and become more attractive in our view. But we don't think it makes sense to be so much exposed to equities because equities are yet to reflect the impact from tighter monetary policy on the economy, on earnings. So I can see bonds performing better in the backdrop of softer growth, even if central banks are still hawkish. But equities, in my view, are still to price more challenging earnings or macro outlook. So this correlation between bonds and equities, in my view, cannot keep going for forever if, in particular, growth is slowing. So you want to be probably in bonds more than equities at this stage of the cycle.
No. Okay, really interesting. Emmanuel, thank you so much. We'll talk a little bit more about that and what kind of correction maybe you expect. Emmanuel Coe, their head of European equity strategy at Barclays, staying with us. Now, coming up, HSBC profit tops estimates. The lender commits to restoring quarterly dividends next year. We dig into the earnings next, and this is Bloomberg.
Crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you've got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Welcome back to the Open, everyone. 13 minutes into the European trading day on this August the 1st. I know it's Monday. I can't still get my head around the fact that we're already August 1st. Now, if you look at European stocks, we've had a bit of a reversal. So they were down some 0.1%. Now they're rising, weathering risks from China, as well as a drop in U.S. equity futures. I guess there's just one big story in town, and that's, again, a reminder from Federal Reserve officials that interest rates need to go up to quell some of the elevated inflation. And on the back of that, some of these European stocks are maybe trying to find their feet. Now, HSBC profit has beaten estimates propelled by rising interest rates. The lender has committed to restoring its dividend to pre-COVID levels.
We've committed to pay half of that return out by way of dividend, the 50% payout ratio. So I think mathematically, when you run that through, what you'll see is a very material step up in dividends for next year.
HSBC delivering a beat there in the second quarter. Let's talk to Emmanuel Cour, who's head of European equity strategy at Barclays in London. Emmanuel, we're talking a bit about the fact that you see in certain parts of the markets a necessary correction. What kind of correction should we see in equities worldwide and then European equities?
I think we might retest the lows from a month ago. I'm not sure the market has to go much lower in our base case, which is like a mild recession in Europe and probably in the US. But I think upside for now is quite constrained if you have this kind of tricky growth policy trade-off with the Fed in particular having to do more. And I know it's not making the headlines anymore, but Europe still has to deal with this gas or energy crisis. And last week we had a significant move up in electricity and gas prices as well. So Europe is really facing a tricky stagflationary environment, which cannot be a solution by rising rates easily, right? So we think the market will face a fairly tricky, fundamental backdrop in Q3, which might take, the levels back to where we were maybe a month ago. Clearly, you have some support to the market. I mean, in terms of sentiment, positioning from hedge fund, from systematic investor, I can see some support in the short term, and momentum can continue on the positive side. But in my view, you have to put that in the context of a fairly appealing fundamental backdrop.
And Emmanuel, I mean, it's very clear also that global money, as you say, keeps on going to this U.S. dollar-denominated assets. What does it take for that to stop, if anything?
Well, I guess U.S. is a market to own by default, because this is where you have the qualities of growth companies which have outperformed for 10, 15 years. And Europe is almost like uninvestable in the backdrop of the war in Ukraine and this kind of domestic risk that Europe is facing, that Italian politics, etc. So I don't think any investor will really want to go back to Europe. The risk for the US is that you get broader capitulation. We have not yet seen retail investors, mutual funds, long only selling their equity position. And if they had to do that in the backdrop of a much more adverse macro environment, that will probably hurt the US much more than any other market, because as you said, Francine, US is a market which is on. The rest has been de-risked quite a lot. So I'm not sure we have to get there. I'm not sure that we need to get full capitulation, but from a positioning standpoint, US seems to be very crowded.
Emmanuel, at the same time, I know there's been money going into Chinese assets or playing on China. Do the figures out today change any of that?
No, I think China is very well. You're going to see the clear evidence of growth improvement in the second half. So again, as a house, we are quite skeptical about the magnitude of the rebound in China. We don't think China is going to bounce much, because they still have little appetite to overstimulate the economy, and they have the zero COVID policy which stays in place. But China already had that growth adjustment. they have seen growth basically collapsing in the first half of the year. You've seen a meaningful adjustment in the property sector as well. So the base for bouncing growth is quite easy and quite low. So probably compared to other regions, China is where you could see more momentum, more positive momentum in growth. But that's not in our view sufficient to contribute to a very significant boost to the global economy. So I can see sentiment on China improving, but I will not get overly excited about it.
Yeah. What do you like in growth overall? Is it something with a more defensive angle?
Yeah, so what we did a month ago already was to close our overweight on value. So we think the value trade is finished, is over, simply because yields are capped. So if yields don't go up anymore, value cannot outperform, and we think it's time to going back to some of the growth or long duration assets. We've been picking healthcare as the one we like the most, but I can see some of the tech names in Europe, semi-software, trying to find the floor. Yes, they are still missing the growth in terms of kind of positive catalyst on the macro side, on the activity side, but from a valuation standpoint, there was a lot of adjustment being made, and if yields don't go up anymore, that should remove one of the key headwinds for the space. So tech is something you want to have on the radar, in my view.
Emmanuel, as always, thank you so much for all of your insight. Emmanuel Cauder, Head of European Equity Strategy at Barclays. Now let's get straight to the Bloomberg Business Flash. Here's Laura Wright. Hi, Laura.
Hi, Francine. The world's most indebted property developer, China Evergrande, has failed to deliver a preliminary restructuring plan that it promised by the end of July. Instead, the real estate giant presented what it calls preliminary restructuring principles for its offshore debt. The stakes are high, with total liabilities of about $300 billion. Any restructuring could be among the biggest ever in China. Alibaba says it will strive to maintain its U.S. listing after the SEC added it to a list of Chinese firms that face removal. The firm's addition starts a 3-year clock to a final delisting. A key issue is Beijing's refusal to permit American officials to review their auditors' work. That's your Bloomberg Business Flash. Francine.
Laura, thanks so much. Laura Wright in London. Coming up, the summer of strikes continues as Lufthansa faces more turmoil. More on that story next. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
welcome back to the Open, everyone. We are 22 minutes in the European trading day. We're seeing a bit of support for some of these European stocks, brushing off the concerns that we have in China, but it is a summer of strikes. Lufthansa may face further disruption after its pilots voted for strikes if they're considered necessary to force a wage deal. Now, the move could unleash another wave of cancellations unless the airline's negotiators and labor representatives can settle their differences. Now, elsewhere in the summer of strikes, UK dock workers plan to bring Britain's biggest container ship port to a standstill, worsening the country's supply chain problems amid a bitter dispute between unions and government ministers. And finally, this week, barristers and workers at British Telecoms will also be striking here in the UK. So joining us to talk about this week and, of course, the summer of strikes is our very own Lizzie Burden. Lizzie, I mean, these strikes, I mean, how much will they actually hurt the UK economy? It's so very French of them.
Well, it feels costly because, of course, chaos is what the unions want. They're under immense pressure to secure pay rises because if they can't do it in a cost of living crisis, when can they? But in terms of the actual economic cost, the Centre for Economics and Business Research said the June strikes in travel would cost £100 million. That's really small fry, frankly, compared to the overall size of the UK economy. People are much better adapted to working from home post-pandemic. You've got more bike use because the bike network has improved. So that's the cost of disruption. There's also the risk of a wage price spiral. But even Bloomberg Economics says that that is not a major risk because compared to the 1970s, the Bank of England's independent. There's much less unionisation. So really, the economic cost of this summer of discontent could be much less than that winter of discontent from history.
I mean, I guess the problem is that it once again just pushes up some of this inflation and you know, this cost of living as there's wage increases. What does that mean for the Bank of England?
Well, the government's walking this tightrope between having to help people through the cost of living crisis without adding to it itself. For the Bank of England, traders have pared back the risk of a half-point hike from 90% to 70% because of the recession risk in the UK. You had former Monetary Policy Committee member Danny Blanchflower saying that the UK is already in a recession. But Bloomberg Economics' base case is for 50 basis points, a 7-2 split with John Cunliffe, Sylvana Tenreiro going for 25 basis points. Let's not write off the possibility that we could see a quarter-point hike. You know, the Bank of England went into the tightening cycle before the Fed and the ECB, so there's less pressure to put its foot to the floor now. We're past peak tightness in the labour market. You're seeing people participating in the workforce more because of the cost of living crisis. So really, it could come down to how the governor votes and whether the committee follows him.
Now, the trillion-dollar question is, when you see this leadership race, is it all, I mean, has Rishi Sunak lost it, and when do markets start pricing it in?
Has he blown it? Well, betting firms are saying that Truss has a 90% chance of being the next Prime Minister, so it looks almost certain. Overnight, you had Rishi Sunak's camp briefing that there'll be an income tax cut before the end of the next Parliament from 20 to 16% on the basic rate of income tax. Truss's camp says that's just a desperate attempt to stay in the race. And you have got the postal ballots landing on party members' doors today, so it could already be over. You've also had momentum added to Liz Truss's campaign because the heavyweights are falling behind her, perhaps hoping for a place in her cabinet. So it looks very, very uphill for Rishi Sunak at this moment.
Thank you so much, Lizzie Burton, there with the very latest on the UK. We're also trying to find a picture of actually Rishi Sunak in a field with a chair, which I know is going strong on social media. Now, the Fed's Neil Kashkari says the central bank will do whatever it's needed to bring down demand and rein in inflation. Larry Summers accuses Jay Powell, though, of being analytically indefensible. We'll have plenty more on that. This is Bloomberg.
that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
Welcome back to the Open, everyone. 30 minutes into the European trading day. Here are your top stories. Well, HSBC shares jump 5% in London as profit tops estimate. The lender also commits to restoring its dividends to pre-COVID levels. Slumping recovery, Chinese manufacturing unexpectedly contracts in July. Services weaken, highlighting the fragility of the nation's economic rebound. Plus, Kashkari the hawk, well, the Fed dove. Neil Kashkari says the FOMC is committed to slowing inflation to its 2% goal. U.S. futures dip, Asian stocks push higher. Now, this is a picture overall for some of these equity markets. We did start the day lower, maybe concerned a bit of China, but now European stocks pretty much flat, but we're still seeing a bit of green. The DAX, you can see gaining some 0.2%. The peak to there, of course, what happens with gas disruption over from Russia into the winter months, and then the FTSE 100 getting some 0.3%, 0.4%. Let's give them that. You know what? This week is also the Bank of England. Big week for the Bank of England. If they go 50 basis points in terms of a hike, it means that they join 70 other institutions in doing so. And again, Neil Kashkari, he was one of our top headlines, reiterating that the Fed's determination to curb inflation is there. Now, this is what the sectors that are moving the most in today's trading session are doing currently. Now, we did speak to Emmanuel Co, a really good conversation when it comes to some of the growth stocks. He, for example, suggests not only to be invested in growth, but defensive, such as healthcare, banks, telecoms, auto parks, some of the biggest gainers, banks 1.7% higher, maybe given a boost by HSBC. This is thanks to interest rates going higher. Then you have real estate, travel, and healthcare down between 0.7 and 0.3%. Now, markets digesting hawkish commentary from Fed officials, as well as contending with global slowdown fears.
I think Jay Powell said things that, to be blunt, were analytically indefensible. He claimed twice in his press conference that the Fed was now at the neutral interest rate, calling it 2.5.
We're going to do everything we can to try to avoid a recession, but we are committed to bringing inflation down, and we are going to do what we need to do. And we are a long way away from achieving an economy that is back at 2% inflation, and that's where we need to get to.
Minneapolis Fed President Neil Kashkari there, and the former Treasury Secretary Larry Summers. Now, Sean Raitata, a senior European economist at Vanguard, now joins us. Sean, thank you so much for joining us. I mean, I can't get enough of Larry Summers basically beating up on everyone, saying, this is undefensible. What are they talking about? Like, who's right in this?
Well, I think there's a number of, I guess, features to consider there. I mean, when you talk about this inflation-fighting report, what I think is most important to consider is what's happening right now with the Federal Reserve and what they're doing to really pare back on inflation.
Yeah.
And in Vanguard, what we think is actually we're past the peak on the rate tightening cycle. The last time they did 75 basis points would be the last meeting, They'll do 50 basis points probably in the next 2 meetings, and then probably slow that pace down 25 basis points after that.
But then they have it under control. I mean, the concern is that the more we talk about it, I mean, there's a point where, we talk about spiral, is that they lose control. When does that point come?
Well, I think what we're seeing at the moment are already signs of that second-round effects happening, right? Yeah. Wages are growing at 5%. The services part of CPI inflation is growing at 6%. And those two tend to co-move together in quite a close relationship. And so as you get that relationship getting stronger and stronger, that's when it becomes more of an issue. So the Fed needs to go hard and needs to go fast to try and get that under control. And we think the terminal rate will probably get to something like 4%, rather than what the markets are pricing about 3.5% at the moment.
I think we have a good chart, actually, number 4960, which I think is financial conditions, but certainly one of the things that we're watching the most. Okay, Sean, Bank of England. I mean, Andrew Bailey I had him on a panel also with Jay Powell a couple of weeks ago, and he wouldn't really say whether personally he would want to do 50 basis points, because I guess they haven't made up their mind yet.
I mean, that I think is true, but I think they should do 50 basis points. I mean, the labour market is relatively tight. Inflation is yet to peak. The data has come in a bit better than expected as well. And they have space to hike aggressively now before it gets much more difficult during the winter when the cost of living crisis really takes a hold. And I think that's the issue, is that we don't think the bank rate will go much above 2.5% this cycle, because they'll be forced to pause once the consumer-led recession takes into effect.
What's happened actually to the Bank of England? I mean, they had first mover advantage and they seem to have squandered that. Does it actually make a difference in them now trying to play catch up?
Well, I think that is true. I think by going by first mover advantage, they've created space today, so they don't have to go as fast as other central banks. But that being said, with the Fed doing 75, with the ECB doing 50 basis points, now the pressure's on, right? That puts pressure on sterling. That means that they're going to import more inflation, which makes that problem worse. So I think they need to do 50 basis points now to try and stop that in its tracks.
Do you worry more about the UK economy or the Eurozone, given the possible gas embargo?
I think we have to worry about the Eurozone, given how much closer they are to the Ukraine crisis, given the gas embargo. Yeah. Germany, Italy are probably already in recession at the moment. The PMI surveys of last week and confirmed this morning will probably confirm that as well. And, I think the Eurozone economy is going to go into recession later this year, and I think we have to worry a bit more about that than the UK at this point.
So what does that mean for interest rates from the ECB?
Well, the ECB in a very tough position at the moment because, of course, stagflationary shock. It also means higher inflation, higher gas prices, higher electricity prices. Like the Bank of England, they need to go hard at the beginning. We think they're going to do another 150, 175 basis points this year before potentially having to pause in the first half of 2023 as the recession takes more effect.
Are we reaching the limit of what central banks can do? And the ECB being case in point, that it really has to be up to fiscal policy and individual governments to do more?
Well, I think the difficulty here is it's more of a stagflationary shock. It's a negative supply shock, which means that both central banks and fiscal policymakers are hamstrung because it's a supply shock, not demand, which is what they're I guess, focused on. It's a tough position, but we think the ECB has a window now to do a bit more rate tightening before it perhaps gets a bit more difficult as the winter progresses.
I mean, overall, I don't know what you make of China at the moment. There was money being plowed in China, and then, today we had two figures that didn't point to maybe the rosier picture that certain investors were expecting.
Yeah, I mean, China have had a very tough first half of the year. They contracted by 3% in the second quarter. And we think there's going to be a rebound in the second half, led by fiscal policy, great infrastructure spending, greater credit growth. But clearly the PMIs released yesterday seem to pour cold water on that. I guess the big issue at the moment also is the Chinese real estate market, right? I mean, it's a big deal. The real estate market is the largest asset market in the world, even larger than the US stock market. At the moment, we think that issue is manageable. In terms of the mortgages that are affected, probably only 1 to 2% of total mortgage outstanding loans, and probably less than 0.5% of total bank loans. At the same time, something to watch for. It is a big deal.
Sean, thank you so much for joining us. Sean Tata, they're a senior European economist at Vanguard. I feel like we went around the world in like 6 minutes. Now, coming up, HSBC commits to restoring quarterly dividends next year after reporting bumper earnings. We hear from the lender's chief financial officer next, and this is Bloomberg.
back in 1997, I was interested in the following question, which is, there are a bunch of the dinosaurs called sauropod dinosaurs, which had really long skinny necks. So Apatosaurus is an example. They also had really long skinny tails. So I made a computer model that showed that in fact the tail of these sauropod dinosaurs could actually act like a whip, a bullwhip. Now the way a bullwhip makes that cracking noise is because the tip of the whip actually goes about twice the speed of sound.
Okay.
And that crack is a sonic boom.
Yeah.
I think the way they got a date was to impress the females by making loud booms.
I think what we're seeing during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Welcome back to the Open, everyone. 40 minutes into the European trading day, we're seeing a reversal. We are gaining. Look at that. European stocks gaining 0.2%, actually starting August 1st, this Monday, on an upway. The DAX gaining also 0.4%. Similar gains for the CAC and the FTSE 100. This is despite some discouraging news we had from China. U.S. equities still, I think, a little bit under pressure. Those futures, we had the stark reminder from Fed officials that interest rates need to go up to quell elevated inflation. Now, onto corporate stories. It's a beat for HSBC. The bank vowed to restore paying quarterly dividends next year as it seeks to head off a call by its largest shareholder to split up. We've been speaking to the Chief Financial Officer, Ewan Stevenson.
Rising rates is certainly beneficial to us. Interest income was up 20% Q2 on Q2. Revenues were up 12% overall. We also kept costs flat, so we had an enormous amount of operating leverage, 12% jaws in the quarter. And we also had a one-off tax benefit too, so profits attributable to ordinary shareholders are up 60% on a year ago. So we're very pleased with these results.
Your ECL, expected credit losses of over $1 billion. Where are the biggest source of concern in the credit losses? Is it China?
Yeah, look, there's only, I think, one portfolio globally, Manus, that we're paying close attention to, which is really the offshore book of our China commercial real estate exposure. Just over $12 billion of exposure, or about a third of it is substandard or impaired. We have taken about another $150 million worth of provisions this quarter for that. And I think, as you know, the outlook for the Chinese real estate continues to be weak.
Ping An, have you had any formal, informal, bilaterals, any conversations at all with them so far?
Yeah, look, we're definitely talking to Ping An and continue to talk with them. You know, they've raised, as you would expect with any major shareholder raising issues with us. We're taking it seriously. We've still got work ongoing on the structural alternatives that they've proposed. I mean, based on the work that we've done.
Are they
today,
actively asking you to split the bank, Ewan? Are they making a categoric request to split the bank and the listing?
Well, certainly in terms of what we understand that they're looking for is some form of structural alternative. We've spent some time together with outside advisors looking at it. We've put some details into our investor materials today. But I think when we look at all of the various structural alternatives, a combination of upfront cost, a lot of complexity, it would take us 3 to 5 years to implement any form of material structural alternative, together with high ongoing dyssynergies. So, you know, we haven't completed our work, but based on what we can see today, it's very, very hard to find any value case that we could put in front of shareholders.
What kind of dividend do you expect to reward? With a special dividend to sort of hold the investors' nerve with you? How do you set up the dividend narrative for 2023?
Well, we've announced today that we're returning to quarterly dividends. We're very conscious of the fact that pre-COVID, we were paying out at 51 cents a share. We're very keen to get back there as soon as possible. We certainly would expect, based on the earnings trajectory of the bank, to be back there in the next couple of years.
Well, that was the HSBC Chief Financial Officer, Ewan Stevenson. Now, let's dig deeper into the story with Bloomberg's Tom Metcalf. Tom, HSBC, I mean, first of all, are they going to be broken up, yes or no?
Yeah, well, it sounds like this is a very strong case from the bank coming out this quarter as why they don't think you should be listening to Ping An. So that was fascinating. There's a lots of sort of pointed messages within the results about how, hey, we are better as a big international organization. Actually, one of our key selling points is the fact we stretch around the world. And this is a strong set of results. I think the shares are now up, north of 6% in London. So shareholders are kind of reacting well. And I think the HSBC execs are pretty happy with how this quarter's gone.
I mean, have they done better than some of their other rivals? I know this is an interest rate going up story.
Yeah, exactly. It's all part of that trend. But I think what they've done really well is keep a lid on those costs. So now they're guiding that next year they expect their costs to only go up 2%, which is pretty impressive in an inflationary environment. So I think that's what sort of shareholders, analysts are really zeroing in on is, wow, they can keep those costs under wraps. Obviously, net interest income keeps on going up, and that's a great story.
What's your take on loan provisions? I mean, again, this is kind of probably the weakest spot, not only for HSBC, but other UK banks.
Yeah, I mean, so that was fascinating for me because the area that the CFO we just heard said they were really zeroing in on is sort of offshore Chinese property. And there they took another charge, about $147 million, and say more could come in the second half. So a lot might hinge on how bad or if that might improve. Wider story on provisions is a bit like the other UK banks where, perhaps there's a bit of a lag between all this really ominous economic news we keep hearing, but relatively low provisions. And maybe the banks are in kind of a sweet spot where, they're benefiting from those interest rates increases without having to sort of worry about defaults, at least yet.
Yeah, and dividends are back at HSBC, which is a huge deal. And that's starting, I think, in 2023. Are a lot of these banks just becoming cash cows again?
Well, I certainly think that's the story they want to be selling. For HSBC, it's really important because their Hong Kong retail investors were very annoyed when they stopped the dividend back during the pandemic. So that's, again, another kind of key element of this story they're trying to sell is, keep holding our shares, we'll return to that very reliable income we used to provide. And, that's, again, part of the reason the shares are up.
So will that be enough to get Ping An off their back? Probably
well,
not.
I mean, has much changed from Ping An's point of view? I'm not sure. I mean, tomorrow there's this really interesting meeting HSBC has with sort of the retail investors in Hong Kong, and that will be very interesting in terms of how they react to this news. It's a positive set of results. Yeah. Quinn and Tucker can go out there and talk up their strategy, but will that be enough, as you say, because, it's a pretty sort of seismic sort of push from Ping An.
Tom, thank you so much. As always, Tom Metcalf there, who heads our UK bank coverage. Now, let's get straight to the Bloomberg First Word News. Here's Laura Wright. Hi, Laura.
Hi, Francine. England has won a major international football tournament for the first time in more than 50 years. After extra time, the Lionesses beat Germany 2-1 for their first ever UEFA Championship. It's the country's biggest win since the men's team brought home the World Cup in 1966. The final was watched by a record crowd of more than 87,000 at Wembley, underscoring the massive growth of the women's game. The latest data from China shows the country's rebound is still fragile. Factory activity unexpectedly contracted in July as property sales continued to shrink. It's adding to calls for more policy stimulus to fuel growth. The government is sticking to its strict COVID-0 policy of tightening restrictions when virus outbreaks occur. House Speaker Nancy Pelosi is starting her trip to Asia in Singapore, but questions are swirling about whether she could defy China's warnings with a stop-off in Taiwan, which is not on her official itinerary. China has warned of unspecified consequences if Pelosi visits. Beijing considers the self-governing island as part of its territory. Trailblazing actress Nichelle Nichols, made famous playing Lieutenant Uhura on Star Trek, has died aged 89. She eroded racial and gender stereotypes, taking part in the first kiss between black and white actors on US network television. Early in the series, Nichols experienced mistreatment by the studio and decided to leave the show, but civil rights leader Martin Luther King persuaded her to stay. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg Francine.
Laura, thanks so much. Laura writes in London. Now, coming up, Russian gas squeezes mean that Germany is preparing for a hard winter by turning down the thermostat. Will they have to ration gas? We'll focus on that next. This is Bloomberg.
The Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Is moving both Citadel and Citadel Securities to Miami. The scoop was broken by Bloomberg's Amanda Gordon.
Well, welcome back to the Open, everyone. 51 minutes into the European trading day. First, we look at some of these European stocks. Then I also want to talk about Italy, not only because we have some data, but we had some movement on the 10-year Italian yield. Now, onto some of these European stocks. Interesting to see them starting the day lower, but now actually gaining. If you look at Asian stocks, they really were supported despite some concerning, or despite this slide in Chinese factory activity underscoring some of the global challenges. European stocks overall gaining 0.1%, the DAX, the CAC 40, and the FTSE all gaining some 0.3%. We did also have a reminder from Fed officials. Neil Kashkari is the person I'm thinking of, and of course they reiterated that interest rates need to go up to deal with this elevated inflation. Now, the other story of the day, certainly when it comes to some of the movements, is the 10-year Italian yield. Now, this is what we're looking at overall. We're looking at a 5-day chart, currently at 3.03. It fell below 3% for the first time since May, and then you can see it's gone back up. Buyers seem to be taking comfort on a report that we had last week that the far-right leader, Giorgia Meloni, who's leading in opinion polls ahead of this important election on the 25th of September, plans to stick to European Union budget rules if she wins. This is according to officials familiar with her thinking. That gave a little bit of support to the Italian 10-year yield, and then you can see just a little bit of a wobble out there. It did send the 10-year yield below 3% for the first time since May. And then you can see that actually going back up, currently at 3.029. Now, Europe's largest economy is scrambling to get ready for its hardest winter in decades. Germany's parliament is turning down the thermostat. Now, the presidential palace is no longer lit at night. Pools are not allowed to be heated, and municipalities across the country are preparing heating havens to keep people safe from the cold, dragged out of decades of denial by Russia's moves to squeeze gas deliveries. Well, joining us now from Frankfurt is Bloomberg's William Wilkies. William, first of all, congratulations on a wonderful big take, which everyone should really read. We'll also push it out on social media. When do Germans expect Putin might cut off the gas?
Good morning, Francine, and thanks. Most German executives that we talk to, speaking kind of unguardedly off the record, expect that Putin will cut off gas at the worst possible moment. And that's likely to be perhaps the first major cold snap of the winter, which could be November, December. That's usually when the weather turns down then. And that would cause kind of a bit of a rush to try and implement some of these rationing policies that they're developing now. And he would hope to catch Germany off, on the back foot with that.
So what's being done to prepare for that actually happening?
There's a whole kind of range of things that are being done. As you mentioned before, you've got municipal governments turning down kind of lights, heating in various buildings. Companies are also kind of crisis planning to see what kind of processes they could continue if with, X hit to their gas supply. Households are also kind of getting ready. Some are buying electric heaters. Others are stocking up on wood for use in wood burners. So yeah, there's kind of, it's not quite last minute yet, but I think it's dawning on everyone that there could be some real problems with gas supply in the next 3 or 4 months, and it's time to kind of start getting ready now.
Yes, William, how much of a difference does it make? I know we're kind of joking, saying, oh, they're not heating the pools, but does this really make a difference, and what does it mean for the German economy?
I think it makes a marginal difference, but when you start adding up all these little things, perhaps different municipalities and companies view that this makes quite a big difference in protecting core operations, which is what they really want to do. They don't want hospitals or other kind of emergency services being at risk of losing gas. So making these kind of marginal changes really helps with that.
All right, William, thanks so much. William Wilkes there in Frankfurt. And to everyone, of course, who's on the Bloomberg terminal, it's a really wonderful piece, our big take today, called Germany has 3 months to save itself from a winter gas crisis. Now, that's it for the European Market Open. Surveillance Early Edition is up next to focus firmly on some of these markets, but we are away from the earnings season. I know a lot of you probably can catch a break and maybe go to the beach. Italian bonds rallying as investors put aside concerns that a new government would renege on commitments needed to unlock about 200 billion euros of European Union funds. If you look at the 10-year yield, it went below 3% for the first time since May. It's now, back up at 3.03. Now, the rally promises to take pressure off the ECB, but the ECB, of course, also dealing with Germany and some of what we're expecting, which is this gas embargo and what that means for other governments in Europe, not only Germany, but I'm thinking of Austria and other ones. U.S. futures still on the downside, although we saw a bit of a reversal in European stocks. Well, Surveillance Early Edition is up next. This is Bloomberg.
companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
We've committed to pay half of that return out by way of dividend, the 50% payout ratio. So I think mathematically, when you run that through, what you'll see is a very material step up in dividends for next year.
We're going to do everything we can to try to avoid a recession, but we are committed to bringing inflation down, and we are going to do what we need to do. And we are a long way away from achieving an economy that is back at 2% inflation, and that's where we need to get to.
I think Jay Powell said things that, to be blunt, were analytically indefensible. He claimed twice in his press conference that the Fed was now at the neutral interest rate, calling it 2.5.
This is Bloomberg Surveillance, early edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Well, HSBC shares jump over 5% in London as profit tops estimates. The lender also commits to restoring its dividend to pre-COVID levels. Slumping recovery, Chinese manufacturing unexpectedly contracts in July and services weaken, highlighting the fragility of the nation's economic rebound. Plus, Kashkari, the hawk Fed dove, Neil Kashkari, says the FOMC is committed to slowing inflation to its 2% goal. U.S. futures dip, Asian stocks and European stocks push higher. Now, first thing is first, let's check in on the markets. We're also getting some PMI figures for the euro area. I mean, I was saying that actually a lot of these European stocks are higher. Let's get to the European stocks if we have them. But July manufacturing actually came in pretty much as expected. That PMI 49.8. The preliminary came in at 49.6. All right, we have S&P futures down 0.2%. That U.S. 10-year yield at 2.6812. The dollar, 1,264. It'd be great also if we had the European one. So let's get to the map straight, because this is probably the biggest story of the day. We had some encouraging earnings news from some of the banks, which is why we started the day off with a bit of pressure on some of these individual countries. But now, for example, the FTSE is gaining some 0.4%, so we're seeing gains accelerate. Also, the FTSE MIB over in Italy gaining 0.6%. Overall, the story is not only of earnings, but interest rates giving a little bit of a lift to some of the banks. HSBC, case in point, also saying they will resume dividends for the first time. That will be in 2023. Investors also assessing remarks from Federal Reserve officials. I'm thinking of Neil Kashkari saying that, of course, higher interest rates are needed to bring down inflation under control. You can see the IBEX over in Spain gaining 0.7%. 0.7%. Now, China's factory activity contracted unexpectedly in July. Property sales continued to shrink, highlighting the fragility of the economy's recovery. That's as the government sticks to its strict COVID-0 approach of tightening restrictions when virus outbreaks occur. Well, let's bring in Bloomberg's economy reporter, Tom Hancock. Tom, thank you so much for joining us. I mean, what's going on in China right now?
Well, what the data today is telling us is that the bounce back we had in economic activity in June after the virus situation improved and cities like Shanghai were able to lift their lockdowns just wasn't sustained the following months. Things got worse again with the virus, and also, as we know from the headlines every day, the situation for the property market has continued to worsen, and consumer confidence is still really low in China, as well as a very high unemployment rate for young people, a grim outlook for jobs. So this is going to weigh on all the economies that export to China, whether that's Germany and South Korea for machinery or commodities exporters.
So, Tom, what does it mean for China going forward? Is there anything that policymakers will do to, for example, help the property market, which, let's remember, is huge?
Yes, it's really a tough situation for Beijing because they don't want to see a disorderly collapse in the property market, but they've also been very clear that they never want to rely on the property market for stimulus again. And so all they've got to rely on for stimulus really is infrastructure, and the infrastructure sector isn't really big enough to support all of China's economy. So the bottom line is that growth this year is probably going to be even lower than current expectations.
Tom, thank you so much. Tom Hancock there on the very latest from China. And joining us to talk about the markets and to talk about the economy, everything in between, Moritz Kramer, Chief Economist and Head of Research at LBBW. Moritz, thank you for joining us. Let's start with China. If you look at China, we thought it'd be fine. We saw money going in from investors. And then today we have concerns about the property market. What's your take on it?
Yeah, good morning, Francine. I think this has been a long time coming. I mean, China has for many years always propping up the economy and trying to keep growth above what is really a sustainable rate, and mostly by encouraging investment in real estate first and foremost. So I think this strategy has really hit the buffers now. This is sort of hard to negate anymore. So for China, for this year, I would guess that GDP growth would come in somewhere 3.5, but chances are we will never know what the real numbers are because, whether the Chinese authorities will admit to such a sharp slowdown remains yet to be seen.
So, Moritz, going forward, is China one of the biggest unknowns? I know we'll talk about inflation, the Fed, and the fact that Neil Kashkari is now saying, wait, we need to do more. But what's your take on the global economy as a whole?
Well, I think the global economy is slowing down. So for this year, probably overall growth rate will be half of what it was last year, some 3% maybe on average, and even less next year. So the big economic blocks are all going into a slowdown/recession simultaneously. That's the US, China, and the euro area, and there's not much dynamism anywhere else right now. So we're clearly going into a slowdown, and I think this will contribute also to a pause of the interest rate hikes come next year.
So, Moritz, what are you looking for in the U.S. in terms of giving us, are we now pricing in a recession, a technical recession, which is even worse than like a deeper recession? What's the parallel between markets and what we're living through in the economy right now?
Well, I think it depends on where you look. I think the bond markets, you've seen sort of the peaks of long-term rates. If you look at sort of 2-3 year bonds, treasury bonds, you can see them coming down quite a lot. So this suggests strongly that the markets are anticipating this slowdown. If you look at the equity market, on the other hand, is being greatly buoyed by a relatively positive earnings season, which may be something to remember, because if sort of my expectation comes true that we are sort of also in the US economy bordering a recessionary environment, then the earnings will just have to take a hit going forward. And that means that on the equity market, there's still some room below that people should look out for.
Moritz, this is one of my favorite charts, and thank you, Valerie, for putting it together. It's basically financial conditions. I mean, we should really watch it on a weekly basis. What's interesting is that financial conditions are now looser than when we had that initial Fed hike in March. What does it tell you about what we should look at going forward?
Well, I think the Fed is not done yet. We've just heard Larry Summers before speaking or being quoted. So I would agree with him on that one, if I may say so. So I would think that, you know, there is still sort of a couple of hikes down the sleeve, but the Fed will probably stop at 3.5%, because what we will also see is, as the economic environment becomes more difficult, the market conditions will also tighten. You know, the banks will be more careful, but also the capital markets may not be close to weaker names as they have been so far. So all things considered, I would believe that the Fed will stop at 3.5% and is pretty much done after that.
Okay, really interesting. Thank you. Moritz Kramer, Chief Economist and Head of Research at LBBW, stays with us. We'll talk a lot more about what it looks like for the markets. Coming up, Neil Kashkari says the Fed will need to keep an eye on inflation and do what it needs to do to keep prices down. We'll look at how markets are reacting. That's coming up next, and this is Bloomberg.
On the product may read "Made in the USA," but the sign on the CEO's door often says "Made in India." Alphabet's Sundar Pichai, Microsoft's Satya Nadella, IBM's Arvind Krishna, Micron Technology's Sanjay Mehrotra, and that's just the start. Add in the chief executives of Adobe, Deloitte, Gap, VMware, and that doesn't count Indians running companies all over the world. Why have so many Indians risen to the top? Vinod Khosla points to India's incredibly competitive education system. If you can survive the pressure it takes to get into one of the Indian institutes of technology, it gives you confidence to handle American universities and later the business world. Meanwhile, the belief in India's ability to produce so many tech wizards is reinforced every year. Indians make up about 3/4 of the immigrants receiving coveted H-1B visas for the U.S., and it's a safe bet that some of them will eventually find their way to the C-suite.
I think Jay Powell said things that, to be blunt, were analytically indefensible. He claimed twice in his press conference that the Fed was now at the neutral interest rate, calling it 2.5.
We're going to do everything we can to try to avoid a recession, but we are committed to bringing inflation down, and we are going to do what we need to do. And we are a long way away from achieving an economy that is back at 2% inflation, and that's where we need to get to.
Well, Minneapolis Fed President Neil Kashkari and the former Treasury Secretary Larry Summers there on the state of the U.S. economy. We're back with Moritz Kramer, Chief Economist and Head of Research at LBBW. Moritz, we were talking about this before. I mean, Larry Summers, I have to say, makes me laugh because he just never pulls any punches. I mean, he's like, this is analytically indefensible. Has he been right all along, or are we now giving him too much credit?
Well, I think he's been broadly right. I mean, the Fed, like other central banks, they've been waiting too long. They've been behind the curve. Some of them, like the ECB, have been so behind they didn't even see the curve anymore. The ECB is much slower in catching up. So the Fed is really racing to reconquer control over the inflation situation. And I think you need to give them credit for that. I think 2.5, whether that's the neutral rate, that's a guessing game, but it's certainly not the target rate where this cycle will end, which will go well beyond 3%.
But Moritz, overall, is it that they're really behind the curve, or is it actually that we've come to a realization that central banks cannot be the only game in town, and that what it feels like?
Yeah, well, central banks have been exceptionally lucky in the last 2 decades or so because you had a lot of deflationary pressure coming through globalization, coming through China, entering the world trading system when the country joined WTO. All of this is going into reverse now. So all the deflationary pressure is now gone. Now you have inflationary pressure also from trade. You have inflationary pressure because of aging populations. Of course, you have the energy situation, and now suddenly everything is going against you, and the central banks realize that they've been probably too confident about their own capabilities of controlling inflation, when a lot of it was also due to good luck.
Moritz, what is the most interesting currency right now? We've seen some of these quirks play up. I don't know whether the carry trades are back and whether that is here for a long time.
Well, I think the one that everyone watches and that I think is really central as well is, of course, the euro-dollar cross rate, which is hovering around parity. Given my expectation that the Eurozone is much closer and almost a foregone conclusion that it will fall into a recession, there's more weakness for the euro ahead. But short of a complete gas stop of Russian gas in the coming weeks or so, I would think it's not going to go very much below parity and should recover by the end of the year somewhat. But that's the critical rate, because also for the Eurozone and the ECB, the lower the euro becomes, the more inflationary the backdrop becomes as well, and that makes their tasks just so much harder.
Moritz, thanks so much. As always, Moritz Kramer, their chief economist and head of research at LBBW. Now let's get straight to the Bloomberg First Word News. Here's Laura Wright. Hi, Laura.
Hi, Francine. England has won a major international football tournament for the first time in more than 50 years. After extra time, the Lionesses beat Germany 2-1 for their first ever UEFA Championship. It's the country's biggest win since the men's team brought home the World Cup in 1966. The final was watched by a record crowd of more than 87,000 at Wembley, underscoring the massive growth in the women's game. The latest data from China shows the country's rebound is still fragile. Factory activity unexpectedly contracted in July as property sales continue to shrink. It's adding to calls for more policy stimulus to fuel growth. The government is sticking to its strict COVID-0 policy of tightening restrictions when virus outbreaks occur. President Biden has again tested positive for COVID-19 as he continues to deal with a rebound case of the disease. He says he's not symptomatic but will continue to isolate. He first tested positive on July the 21st and back then was experiencing mild symptoms. Trailblazing actress Nichelle Nichols, made famous playing Lieutenant Uhura on Star Trek, has died aged 89. She eroded racial and gender stereotypes, taking part in the first kiss between black and white actors on US network television. Early in the series, Nichols experienced mistreatment by the studio and decided to leave the show, but civil rights leader Martin Luther King persuaded her to stay. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg, Francine.
Laura, thanks so much. Coming up, the summer of strikes continues as Lufthansa faces more turmoil. More on that story next, and this is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
The energy markets are tight and will remain tight and volatile, I think, not only for the remainder of this year, but also well into next year.
We do see a softening of economic conditions in the second half of the year and potentially a recession, at this point a modest recession in Germany and a slowdown in Europe.
We are now preparing a short-term contingency plan to protect our German plants from that gas supply crisis.
Many factors that come into this, which creates a very, very complex picture, which is hard to predict. But what we do see is continued volatility and very tight markets going forward.
We have already reduced our gas consumption by 10% in Germany, which would be the country that we would have to focus on. And we have put together plans to be able to reduce gas consumption by up to 50%. While maintaining full operations.
For Europe, for example, and we also don't expect a significant downturn unless the gas supplies really get cut off.
Well, voices there talking about Europe's crisis. Many chief executives, of course, warning on what could come. More on that later in the program. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. This is what the markets are telling us. Now, we did see a reversal in the last, I think, hour or so. European stocks actually now on the upside. This, despite some warnings from China. We had a slide in China factory activity underscoring some of the global challenges. And then the other story, of course, is what's happening to the Italian 10-year yield, falling below 3% for the first time since May, now a little bit back up, but it is really investors putting aside concerns that the new government will renege on some of the commitments made to unlock this 200 billion euros of European Union funds that sent a 10-year yield below 3% for the first time since May. Now, Lufthansa may face further disruption after its pilots voted for strikes if they're considered necessary to force a wage deal. The move could unleash another wave of cancellations unless the airline's negotiators and labor representatives can settle their differences. Now, elsewhere in the summer of strikes, UK dock workers plan to bring Britain's biggest container ship port to a standstill, worsening the country's supply chain problems amid a bitter dispute between unions and government ministers. And finally, this week, barristers and workers also at British Telecom will be striking in the UK. Well, joining us now to shed light on this week in the UK is Bloomberg's Lizzie Burton. Lizzie, wow, these strikes. I mean, we're just not used to it here in the UK. What does it mean for the economy?
Well, the cost is twofold. So on the one hand, there's the actual cost of the disruption. When it comes to travel, the Centre for Economics and Business Research estimated that the June strikes would cost £100 million. Now, really, that's small fry compared to the overall size of the UK economy. It just feels big because we all use the trains, but really post-pandemic, we're much more adapted to working from home and to cycling to work. There's also the second part, the risk of a wage price spiral, but Bloomberg Economics says it's not a major risk because compared to the 1970s, we're much less unionised, the Bank of England's independent, and there's more automation.
Okay, I mean, it is incredible, actually, how also the markets have changed in that period. All right, Bank of England, it's exciting, but actually fewer traders now believe that we're going to see a 50 basis point hike. Why?
Because of the recession risk. And you had Danny Blanchpower, former MPC member, although Archdove, saying that
Archdove.
Yeah, we're already in a recession in the UK, says Danny. But really, we shouldn't underestimate the possibility of a 25 basis point hike on Thursday. The bank's expected to do 50, but there's less pressure on the BOE to go for a supersized hike like the Fed and the ECB because it started sooner. You heard Andrew Bailey at his Mansion House speech saying that 50 basis points isn't locked in. Everybody seems to have read this as saying, he's mentioned 50, they're going to do it, but maybe we should take him at face value. And if you look at the economic data, the jobs market does seem to have passed peak tightness. People are going back to the workforce to deal with the cost of living crisis.
Yeah, it really, I mean, one of the most interesting, actually, decisions that we could see. Danny Blanchfield, by the way, on fire on Twitter, as always. All right, then there's a leadership contest, right, of who will lead the Tory party. Is there anyone who supports Rishi Sunak at this point?
There are lots, and I speak to MPs in his camp all the time who are still confident that he can turn this around, but you have to ask, really, what is that founded on? Because Truss is said by the betting markets to have a 90% chance of being the next occupant at number 10. Sunak has announced these new, he's expected to announce these plans for tax cuts, income tax cuts to the basic rate from 20% to 16%, but Truss's camp saying that this is just another desperate attempt, another U-turn to claw back the gap on Truss.
Thank you so much, Lizzie Burden there with the very latest on a big week, of course, here in the UK, and then we look at pound. Talking about currencies, our Valerie just pointed to the fact that the euro's weakest ever versus a basket of EM foreign exchange. Now, coming up, HSBC profit beats estimates. We hear from the lender's CFO about plans to boost dividends. That's coming up next, and this is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down, the manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
No one covers the world like Bloomberg.
There's a sense it'll get to 7% in the coming months. Do you see that coming true?
Federal Reserve, of course, raising interest rates by 75 basis points again.
Where are the job cuts to come from? We will not just cut and run.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
HSBC shares jump over 5% in London as profit tops estimates. The lender also commits to restoring its dividend to pre-COVID levels. Slumping recovery, Chinese manufacturing unexpectedly contracts in July. Services weaken, highlighting the fragility of the nation's economic rebound. Plus, Kashkari, the hawk of Fed Dove, Neil Kashkari, says the FOMC is committed to slowing inflation to its 2% goal. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, if you look at the markets, we did see a reversal about 20 minutes into the opening session. This is a picture overall. I think there's still a bit of pressure on some of the U.S. futures, but European stocks certainly rising as banks' earnings delivering on the upside. Investors also assessing remarks from central bankers that higher interest rates are needed to bring inflation under control. This is a picture overall. We're also looking at crude oil, 102.72. Then we're getting some UK manufacturing figures. I think it's PMI, and I think they're out just now for the month of July. It is coming in at 52.1. We were expecting a 52.2 figure. That was a preliminary figure, so nothing huge there. You can see pound holding onto what we were seeing before that figure came out, 122.06. So that's it for some of the market checks. Let's get on to some of the other big stories, and it's HSBC returning to, of course, strong results, beating estimates and committing to returning to quarterly dividends. Now, a short time ago, the lender's chief financial officer spoke to Bloomberg about what helps drive the results.
Rising rates is certainly beneficial to us. Interest income was up 20% Q2 on Q2. Revenues were up 12% overall. We also kept costs flat, so we had an enormous amount of operating leverage, 12% jaws in the quarter. And we also had a one-off tax benefit too, so profits attributable to ordinary shareholders are up 60% on a year ago. So we're very pleased with these results.
Your ECL, expected credit losses of over $1 billion. Where are the biggest source of concern in the credit losses? Is it China?
Yeah, look, there's only, I think, one portfolio globally, Manus, that we're paying close attention to, which is really the offshore book of our China commercial real estate exposure. Just over $12 billion of exposure, or about a third of it is substandard or impaired. We have taken about another $150 million worth of provisions this quarter for that. And I think, as you know, the outlook for the Chinese real estate continues to be weak.
Ping An, have you had any formal, informal, bilaterals, any conversations at all with them so far?
Yeah, look, we're definitely talking to Ping An and continue to talk with them. You know, they've raised, as you would expect with any major shareholder, raising issues with us. We're taking it seriously. We've still got work ongoing on the structural alternatives that they've proposed. I mean, based on the work that we've done
Are they
today,
actively asking you to split the bank, Ewan? Are they making a categoric request to split the bank and the listing?
Well, certainly in terms of what we understand that they're looking for is some form of structural alternative. We've spent some time together with outside advisors looking at it. We've put some details into our investor materials today. But I think when we look at all of the various structural alternatives, a combination of upfront cost, a lot of complexity, it would take us 3 to 5 years to implement any form of material structural alternative, together with high ongoing dyssynergies. So, you know, we haven't completed our work, but based on what we can see today, it's very, very hard to find any value case that we could put in front of shareholders.
So 3 to 5 years before a material change. So you are actively talking about a separation and a Hong Kong or a Chinese listing for HSBC.
No,
That's what a material change would be.
Not at all, Manus. Actually, our conclusion is that the structural alternatives relative to the standalone plan just don't stack up. We don't see the value case to do any of it relative to the plan that we see as beginning to deliver material near-term value upside for shareholders with very execution risk that's totally in our control.
What kind of dividend do you expect to reward with a special dividend to sort of hold the investors' nerve with you? How do you set up the dividend narrative for 2023?
Well, we've announced today that we're returning to quarterly dividends. We're very conscious of the fact that pre-COVID we were paying out at 51 cents a share. We're very keen to get back there as soon as possible. We certainly would expect, based on the earnings trajectory of the bank, to be back there in the next couple of years.
Well, that was the HSBC CFO, Ewan Stevenson. Now let's get more from our breaking news editor in Taipei, Cindy Wan. Cindy, a lot going on, of course, in Asia with that, visit or not of Nancy Pelosi. Will she go to Taiwan, and if so, when?
Exactly. Will she or won't she? That's a question many people in Taiwan or possibly around the world are eager to find out. So far, we have very little information about Pelosi's Taiwan visit, but if she does, it's going to be the first time in 25 years for someone in her post to visit this democratically ruled island. It's going to be a significant move and a huge boost to Taiwan's visibility. And Taiwanese government so far has been very tight-lipped about Pelosi's trip. When asked by reporters in Taipei this morning, Taiwanese Premier Su Jin-chang told reporters by neither confirming nor denying the trip by just saying that, well, we welcome any visit of the foreign visitors and we respect the timing of their visit according to their plan. But judging from media reports we've seen in Taiwanese media these days that there are speculation of Pelosi could come in Taiwan on Tuesday, Wednesday, or Thursday. So she's in Singapore now, and she will visit South Korea, Japan in the following days. To be honest, who knows? Her plan could just divert into Taiwan at any point of her trip.
But Cindy, how will China react? Could this be the biggest foreign policy mistake of the decade?
Yeah, that's a very important question to ask, to be honest. China has warned the United States of grave consequences if Pelosi visits Taiwan. And US President Biden also said that military thing, it's not a good idea for Pelosi to visit Taiwan right now. So it's widely expected that China would react very strongly should Pelosi really visit Taiwan. But the question is what? There are several possible scenarios for China's reaction. First of all, despite near daily incursions into Taiwan's ADIZ or Air Defense Identification Zone, China could still send large number of POA war planes into Taiwan's ADIZ. And the current record stood at 56 that happened in October last year, and that's believed to be in response to the US-led military exercises. And another scenario could be that the POA war planes could cross the Strait Median Line. Yeah. That happened several times before, especially when there are key U.S. government officials visiting Taiwan. So there are experts saying that if Pelosi do visit Taiwan, it's possible that POA would send the war planes in the narrowest part of the Taiwan Strait for an extended period of time. In that case, that would create huge pressure. Yes.
Yeah, and this would be, the President of the United States of America is actually against Nancy Pelosi visiting Taiwan. So what would it achieve? In what capacity would you do this?
Well, it's believed that Pelosi's visit could just very likely be symbolic. It would just be a symbolic move for the House Speaker to show the strong support from the United States to Taiwan, and also just to show that they want to support freedom in the democratically ruled island here in Taiwan.
Thank you so much for joining us. Cindy Wang there, of course, from Taipei. If the market's probably on tenterhooks after the speculation that was then denied. And now there's again voices on social media saying she may show up tomorrow. We'll have plenty more, of course, on this foreign policy as it's unfolding. Coming up, Germany scrambles to get ready for what's likely to be its hardest winter in decades, but with few viable options for alternatives to Russian supplies, is rationing on the table. We'll have plenty more on that next. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News. Here's Laura Wright. Hi, Laura.
Hi, Francine. England has won a major international football tournament for the first time in more than 50 years. After extra time, the Lionesses beat Germany 2-1 for their first ever UEFA Championship. It's the country's biggest win since the men's team brought home the World Cup in 1966. The final was watched by a record crowd of more than 87,000 at Wembley, underscoring the massive growth of the women's game. The latest data from China shows the country's rebound is still fragile. Factory activity unexpectedly contracted in July as property sales continued to shrink. It's adding to calls for more policy stimulus to fuel growth. The government is sticking to its strict COVID-0 policy of tightening restrictions when virus outbreaks occur. Deutsche Lufthansa may face further disruption. Its pilots have voted for strikes if they've considered necessary to force through a wage deal. It's a move that could unleash another wave of cancellations unless the airline's negotiators and labour representatives can settle their differences. That's on top of the 7,000 flights the company has already cancelled this summer. President Biden has again tested positive for COVID-19 as he continues to deal with a rebound case of the disease. He says he's not symptomatic but will continue to isolate. He first tested positive on July the 21st and back then was experiencing mild symptoms. The trailblazing actress Nichelle Nichols, made famous playing Lieutenant Uhura on Star Trek, has died aged 89. She eroded racial and gender stereotypes, taking part in the first kiss between black and white actors on US network television. Early in the series, Nichols experienced mistreatment by the studio and decided to leave the show, but civil rights leader Martin Luther King persuaded her to stay. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg Francine.
Laura, thank you so much. Now, various voices from big business. We'll have plenty more, of course, on that and what they think about Europe's gas crisis. Now, Germany in particular is under pressure as it scrambles to get ready for what's likely to be its hardest winter in decades. Well, with a few viable options for alternatives to Russian supplies, the focus has shifted to clamping down on demand, and rationing has become increasingly likely. Let's get more with Bloomberg's William Wilkes from Frankfurt. Will, thank you for joining us. How bad does it get?
Francine, good morning. It could get quite bad this winter. I think it depends on the weather in large part, but companies are kind of finalizing emergency plans for cutting production and, municipalities are preparing to protect citizens in case there isn't enough gas, that the prices go super high and people can't afford to heat their homes and they need a sanctuary away from the cold. But it really, a lot depends on how cold the winter is.
I mean, we don't, we talk about rationing. I mean, rationing is definitely coming. If you switch off, for example, if you don't heat the pools, I mean, it seems that this would have a very marginal impact. How much does the German economy have to contract to actually make a meaningful difference on how much gas it uses?
That's an interesting and unknown question at the moment, Francine. Yeah, all these energy efficiency measures are making kind of marginal differences. But yeah, if it came to kind of a stop of gas and Germany, had to abruptly shut gas, then yeah, it would require a recession and big cuts in kind of production and some really significant economic fallout to balance, to get prices back down to a kind of normal level. And that would have implications for everywhere in Europe, for, all industrial supply chains and other major economies in Europe. If Germany goes into a deep gas crisis-led recession, then we'll all feel it.
Yeah, we certainly will all feel it. Will, what are you working on next? Again, is it a matter of when the embargo comes or if it comes?
I think it's probably a question of more when it comes rather than if at this point. German executives fully expect this to happen, and probably in the first serious cold snap of the winter, which would be kind of the Putin exiting, this tool on the maximum kind of pain point. So we're working on how companies are preparing for this. There's a lot of kind of frantic last minute kind of or last month kind of scenario planning and kind of checking supply chains to see where potential weaknesses or potential kind of hidden stumbling points are. And that work will continue right until it happens, and then we'll see how well all these crisis plans have worked and and how Germany copes with this thing that everyone knows is coming down the track.
All right, really interesting. Well, thank you so much, Will Wilkes there in Frankfurt. Coming up, the end of the crypto winter. Now, some analysts think it might be. We'll take a look at Bitcoin next. I'm excited about this next section. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
To me, it's that company in Cupertino. It's Apple, because I think that's one is an underestimated demand cycle still, even with a swirling macro in terms of iPhone 14. You got a quarter of the base, about 225 million, that have not upgraded in 3.5 years.
Everyone had become so bearish. The economic data is very mixed, but not universally negative. And I think there was some room, particularly from some of the systematic players and things, for a little support in the market near term.
I think those companies that have diverse and durable business models are probably going to fare best in this kind of environment.
Google and Microsoft were actually very, very strong. They have emerged as leaders during these very challenging macro times.
Any tech monopoly is going to be a flight for safety, right? Where investors want to put their money in the less risky places that can still grow.
Guests answering their MLive Pulse question on which of the tech giants have the biggest upsides. It makes for some really interesting listenings, especially looking at the various differences from all of our guests. We'll talk a lot about tech shortly, but now let's get straight to the Bloomberg Business Flash. Here's Laura Wright. Hi, Laura.
Hi, Francine. Deutsche Lufthansa may face further disruption. Its pilots have voted for strikes if they've considered necessary to force through a wage deal. It's a move that could unleash another wave of cancellations unless the airline's negotiators and labor representatives can settle their differences. That's on top of the 7,000 flights the company has already cancelled this summer. The world's most indebted property developer, China Evergrande, has failed to deliver a preliminary restructuring plan that it promised by the end of July. Instead, the real estate giant presented what it calls preliminary restructuring principles for its offshore debt. The stakes are high, with total liabilities of about $300 billion. Any restructuring could be among the biggest ever in China. Alibaba says it will strive to maintain its U.S. listing after the SEC added it to a list of Chinese firms that face removal. The firm's addition starts a 3-year clock to a final delisting. A key issue is Beijing's refusal to permit American officials to review their auditors' work. That's the Bloomberg Business Flash. Francine.
Laura, thank you so much. Now, Bitcoin declining after reaching the highest level since mid-June on Saturday amid optimism that the market may have recovered from its worst levels. Now, to dive deeper into this, let's bring in Bloomberg's crypto reporter, Emily Nicole. Emily, great to have you on the program to make us smarter about Bitcoin. Now, what's been happening to Bitcoin over the last few weeks?
So it's definitely been a rocky few weeks for Bitcoin, but it's still its best month this year. We've seen a lot of activity going up and above 20,000. As kind of it's still its bottom, but it's moving around that point. Over the weekend, we saw Bitcoin rise up to more than 24,000. That was its peak, and has since come down a bit. It's down about 2% this morning. And what we think happened is there was, a lot of trading over the weekend, but the market's very illiquid then. And so even though it tried to push higher, there just wasn't enough liquidity in the market to maintain that. And so coming into Monday, as more liquidity comes onto the market, we're seeing a little bit of a pullback this morning.
So is this rally unique compared to, some of the others that we've seen recently?
So we definitely have some of the twin efforts coming into the market of, we've seen the Fed hike from last week. Some of the things that would normally push assets down, Bitcoin has really kind of rallied in those moments and hasn't really been as weak as some of the other parts of the traditional finance market, at least. And so that sense that Bitcoin is, a store of value, a hedge against inflation, that argument hasn't yet gained proper weight again, but it is starting to see some sort of signs of strength as Bitcoin does kind of stay stable in a market where everything else is crashing.
So, Emily, what are you looking for? I don't know whether, I'm not sure whether there's fundamentals or technicals that we should be watching out for, but how will it play out in August? The $1 trillion question. I know we'd all be rich if you got it right.
Yeah, exactly. Well, I was speaking to a crypto hedge fund manager just about 10 minutes ago, and he was saying to me that it's about 24,400 is the mark that we're next looking for Bitcoin, and 1,750 for Ether. Those are the next technical levels that it needs to break through, but it'll need to be happening in a market where there's a bit more liquidity, and over the weekend there just wasn't enough of that. So those are the points that I'll be watching for over the next few days.
Are there some of the big names? I know there's been quite a lot going on in the last 6 weeks or so, 6 or 7 weeks, like a lot of, the big names, like Novogratz that were full in, that then went out. Is that changing around a lot?
There's definitely some movement happening from whales in the market, but the problem is that in the areas where Bitcoin needs to push through, so say from 24,000 to 28,000, there's just really a dearth of activity there, at least according to the hedge fund manager that I just spoke to. And that's the major issue. That's why we need to kind of see some whales get back into the market in order to prop it up, because otherwise the crypto isn't just going to be able to make that reach back up and really kind of signal the end of the crypto winter as we know it.
Emily, as always, thank you so much for making us smart on Bitcoin and all things stablecoin. Emily Nicole joining us. Now, this is a picture across the markets. So we look at some of the yields. I know we talked a lot about Italian yields. This is after we're trying to figure out if when we go to the snap elections, September 25th, who comes into power and whether they renege on some of the promises that they did to the European Union under Draghi's government. Now, European stocks ticking higher, corporate earnings continuing to deliver upside surprises. Investors now assessing remarks from central bankers that higher interest rates are needed to bring inflation under control. I'm looking, for example, at HSBC. They posted better than estimated profits, so that's giving a nice little lift to a lot of these bank stories. Dollar falling, treasury yields inching higher, but at about 2.67, the 10-year rate still well down from June's peak at 3.5%. Yen also one to look out for, jumping for a fourth session versus the dollar, oil retreating. Well, Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller and Kay Lines are in New York. Anna Edwards is here in London. They'll go through all of the market moves. They'll, of course, talk also about Nancy Pelosi. Will she or will she not show up in Taiwan? This is probably the biggest foreign policy trip that we could see this decade. How that plays out in the markets is still to be seen. We'll also look at financial conditions after we heard from Neil Kashkari over the weekend. This is Bloomberg.
almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, But many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada, 1-2 itu ada. Tapi nggak kayak dulu, kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Is moving both Citadel and Citadel Securities to Miami. The scoop was broken by Bloomberg's Amanda Gordon.
Investors should recognize that there's been a lot of ups and downs in the economy in this quite fast-moving cycle.
I think we're still at great risk of a recession here.
It's a tough market. It's a tough market for allocators and individual investors.
We're focused on data, which is going to be much more volatile.
If you put your long-term investor lenses on, then it is still a great time to invest.
This is Bloomberg Surveillance, Early Edition with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. China's economic rebound is still fragile. Factory activity unexpectedly contracts in July, and property sales from the country's top developers continue to fall. The Fed renews its pledge to reduce long-term inflation to 2%. Minneapolis Fed President Neil Kashkari says the central bank will do whatever's necessary. And the fate of the Senate Democrats' tax, climate and drugs bill may be up to one senator. For now, Arizona's Kristen Sinema isn't saying how she'll vote. Welcome to Bloomberg Surveillance. This is the early edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines over in New York. Well, Kaylee, European stocks trying very hard to start August the way we conducted July. Positive for risk assets, of course. The Asia session, though, having to deal with that weak data out of China.
Yeah, absolutely, Anna. It didn't weigh on risk sentiment too much in terms of equities because you did have stocks in the region broadly higher in Japan, Hong Kong, and yes, even in China. The MSCI Asia Pacific Index as a whole was up about 0.75%. But that China data, of course, showing manufacturing PMIs back in contraction territory in the month of July, coming in at 49. That was below what economists expected. Really shows the fragility of the Chinese recovery as they continue to pursue COVID zero policy. And of course, a lot of that weakness is stemming from the property sector, which continues to be in crisis. And actually, a Bloomberg intelligence gauge of those Chinese developing stocks fell about 1.3% overnight to the lowest level since all the way back in March. And while you didn't see too much risk appetite being lost from equities, you definitely still saw that growth concern reflected in the bond market, with the Chinese 10-year yield coming in about 3 basis points at 273. That is the lowest level going back to May. And finally, in foreign exchange, I would note the continued strength of the Japanese yen, stronger against a dollar for the 4th day in a row. That is the longest winning streak going back to February. Right now, dollar yen trading just above 132, Matt.
All right, well, we are looking here at futures that are off just a bit to start off the month. Remember,
in July, we were up over 9%. So a fantastic month for stocks. You can call it a bear market rally if you like. Nonetheless, if you were holding, you made money. U.S. 10-year yield right now rising just about 2 basis points to 266.85. So really low level for the 10-year yield. And that is actually a booster to stocks. So maybe this negative futures number could turn around. We do see NYMEX crude coming down right now, more than $2 a barrel, 96.50 on recession concerns. So that may be another relief for stocks if in the next 5.5 hours, 4.5 hours, we see something turn around. Bitcoin is off 2.2%, but at a relatively high level, 23,284. Nonetheless, it is very correlated to risk assets, and this could portend some more clouds coming in later today. Anna, what do you see in Europe?
Well, Europe taking a more glass half full look, I suppose, at the same data set then, Matt, because we see European stocks moving higher this morning. We have this pretty broad-based rally coming through across European equity markets. You'll see the Spanish and the Italian market flashing slightly greener than the rest, and there is some movement at the periphery. More on that in a moment. We've also had some data out this morning. So Euro area economic growth data grew at 0.7% in the second quarter. The median estimate, 0.2%. I think that is a hangover from last week, in fact, some of that data, so we'll leave that for a moment. But this is what we see on the markets picture right now. In fact, the data that we reacted to at the back end of last week. And to Matt's point, it was a really strong month in the month of July. So this is strength across Europe. Not all that much conviction behind it, perhaps, and especially as we see those US futures looking pretty negative. Let's have a look at some of the individual movers, though, because there are some really interesting stories, not least from the banking sector. More on HSBC in just a moment, but this is what we have right now. HSBC's share price moving up by 5.7%. The banking sector doing really well today, and that is helping to lift the London market. It seems higher interest rates and a commitment around future dividends lifting the prospects for that stock. Pearson, the online publishing business, they beat estimates, and it's what they're saying about costs and taking out costs that seems to be pleasing some of the analysts, and that stock up by more than 6%. Heineken, the beer maker, out with numbers, and again, backward looking, they did look to be better than the market had anticipated, but there was a slightly muted nature to the outlook, according to some analysts, and that weighing on the stock this morning, down by 1.8%. I mentioned that Italian stocks are doing pretty well, perhaps in connection with the same thing that's been driving 10-year yields in Italy back down below 3%, the first time in a few months that we've been there. And this really on hopes and expectations that perhaps even if we are going to see a change of leadership in Italy in September, that the new Prime Minister won't necessarily want to undo the progress that has been made on the fiscal front by Mario Draghi. Kaylee.
All right, well, we will continue to watch Italian politics and UK politics as well this week, with the Tory party set to vote between Liz Truss and Rishi Sunak. But there is also still a lot on this week's agenda, including later today, we'll get U.S. ISM manufacturing numbers, those coming at 10 a.m. Eastern time. We'll also be hearing from several Fed officials. Chicago Fed President Charlie Evans and St. Louis Fed President Jim Bullard are set to speak at separate events on Tuesday. Then on Wednesday, there's an OPEC Plus meeting on output. Will the Biden administration get what it wants and have the coalition or the cartel pump more oil? Then the Bank of England will be making a rate decision coming on Thursday. Will the move be 50 basis points? And finally, rounding out the week with the U.S. payrolls report on Friday, that going to be absolutely crucial for the Federal Reserve, Matt.
All right, we'll be watching those numbers obviously very closely. Right now, let's see what's going on in China. Economic rebound there remaining fragile. Factory activity unexpectedly contracted in July. Tom Hancock, Bloomberg's China economy reporter, joins us now with the details. Tom?
Hi, yes. So the number for the PMI really showed that the expansion in Chinese economic activity that we saw in June after the COVID situation improved and lockdowns were lifted in places like Shanghai. That really ran out of steam in July. The COVID situation got worse. Housing market has been terrible, and consumer confidence is really close to an all-time low. And so what you're seeing is the result of that, plus a weakening export outlook for China. And so that's going to weigh on the countries that are dependent on Chinese demand, whether that's Germany and South Korea, who export a lot of manufactured goods to China, or big commodity producers. They're also going to find that Chinese import demand will continue to slow. And the stimulus that we got last week, signaled by the Chinese leadership, really looks like it won't be very large at all relative to what we've seen in previous slowdowns. So the outlook for China is likely to continue to deteriorate.
Okay, Tom, thanks very much. Bloomberg's Tom Hancock will continue to track the China story, and we will speak, in fact, as Tom suggests, to one of the companies that is busy supplying China with a lot of basic materials and get their take on where they think the economy goes next. Now, HSBC profit beat estimates propelled by rising interest rates. The lender is also vowing to restore its dividend to pre-COVID levels as soon as possible. The CFO, Ewan Stevenson, spoke with Bloomberg earlier.
We've committed to pay half of that return out by way of dividend, the 50% payout ratio. So I think mathematically, when you run that through, what you'll see is a very material step up in dividends for next year.
Talking about dividends there, Tom Metcalf, Bloomberg Finance Editor, joins us now. Tom, good morning. The shares are up, as I was just mentioning, quite strongly this morning. So what about this report do investors like?
Yeah, shares up more than 5%. And I think it's really, the outlook. So the bank came out and said, hey, look, we are going to be able to keep our costs under control next year. They're sort of estimating about 2% rise, which is pretty good in this inflationary environment. And then, of course, the return of the dividends has been a bone of contention for plenty of shareholders. So largely, HSBC doing the best they can to kind of make a case for staying as this global bank rather than splitting off their Asia unit, as some shareholders are calling for.
What's the story with Ping An's push for a breakup? They're the biggest shareholder, right?
Yeah, so obviously HSBC making the case against the Ping An argument. Pretty much if you go through the earnings, you hear what the CEO, the CFO were saying today. It's a pretty clear sort of step-by-step case for why they don't think that's a good idea. I mean, the results are certainly what I guess HSBC's management would have wanted for. It does sort of point towards this is why we're a global bank, this is how it works. But this is by no means this is the end of the argument. This is, it's going to run and run, and I don't think anything today will necessarily have convinced Ping An of a different approach.
All right, well, we'll keep coming back to you for updates on this story. Bloomberg's Tom Metcalf, thank you so much. Turning now to the Federal Reserve, Minneapolis President Neel Kashkari says the Fed is committed to doing what's necessary to bring down inflation. 2% is the aim. He spoke on CBS's Face the Nation yesterday.
We're going to do everything we can to try to avoid a recession, but we are committed to bringing inflation down, and we are going to do what we need to do. And we are a long way away from achieving an economy that is back at 2% inflation, and that's where we need to get to.
Morgan Stanley's Mike Wilson, however, is warning that the Fed's tightening is leaving little room for stocks to rally. Kriti Gupta, Bloomberg Markets correspondent, joins us now for more. So, Kriti, obviously we're coming off the back of a huge week of gains as the market is kind of expecting that the Fed is going to push pause eventually. Right. But the indication from Neel Kashkari's comments is they have a mission. It's to bring inflation down, and that pause isn't necessarily coming soon.
Right, and remember, this also comes as you see financial conditions already tightening significantly into restrictive territory. So there's two sides of the argument. I'll start with the bearish argument. That seems to be the consensus, at least, where you do have this idea that the bear market that we've seen, the selling, it's not over. A lot of it tied to the Federal Reserve. We haven't been in this quantitative tightening environment, I'd argue, ever to this extent, and therefore the market just perhaps isn't prepared for it. At the same time, those recession fears are still really leading the way. So it is a sentiment story as much as it is a fundamental story. And that's something that David Kostin over at Goldman Sachs said as well. He said the earnings picture looked good, but those recession fears, we are still there. The fact that we hit that technical recession, well, as Mike McKee would say, that's really only a markets thing. No one else cares when it comes to the fundamentals. But then you do have the bull case as well, which is that perhaps the market has bottomed out. Perhaps the fact that we have hit that technical recession is the buy signal that a lot of people were waiting for. And people were so bearish going into these earnings that the earnings actually came out better. So there is a fundamental case for a little bit of a rebound.
We had an MLive survey, your former team, right, coming out with a survey on big tech and Elon Musk. 75% of the respondents think that Musk won't end up owning Twitter, which I can't believe it's not closer to 100%. What's the story with this lawsuit?
Well, the lawsuit is ongoing. I believe Twitter specifically is asking for a 5-day trial. Elon Musk is still trying to push for some sort of delay. From a share perspective, it looks like Twitter has the upper hand, at least from an investor point of view. So that's what we're waiting to see, whether or not that is actually true. But there is a macro case to be made here in that Tesla shares are a massive weighting in the S&P 500 to the point that if you start to see Elon Musk sell shares, which we've been here before, it does pull down the entire index as well. So that's something you want to keep an eye on. But also, his selling shares is not necessarily tied to his Twitter lawsuit because that kind of $1 billion breakup fee, it's not like the shares are going to necessarily pay for that, but he did also already try to hit that 10% level with the options, exercising options. Once again, he hasn't 100% exercised all of them, so this might not necessarily be related, but keep an eye on it because anything could happen, as we know with this saga.
Indeed. Kriti, thank you very much. Bloomberg's Kriti Gupta on a range of subjects this morning. Over to Washington now. President Biden is isolating at the White House after testing positive again for COVID. He has a so-called rebound case that is seen in people who take the antiviral drug Paxlovid. The White House says the president is not experiencing any symptoms. Meanwhile, in the Senate, the architect of the Democrats' tax, climate and drugs bill, Senator Joe Manchin, is lobbying colleague Kyrsten Sinema to get on board. Manchin spoke on CBS yesterday.
This is fighting inflation. This is all about the absolute horrible position that people are in now because of the inflation cost, whether it be gasoline, whether it be food pricing, whether it be energy pricing. And it's around energy mostly. It's driving these high inflation. This is going to take care of that because this is aggressively producing more energy to get more supply to get the prices down. That's what we're doing.
Anne-Marie Hordern, Bloomberg's Washington correspondent, joins us now from D.C. Anne-Marie, really interesting to see a sort of role reversal, or at least a different role for Joe Manchin, having to persuade others to get on board with his position.
Yeah, Nana, and that's because the Democrats need every single Democratic senator, 50 votes, to vote for this in order to get over the finish line. They're using reconciliation to push this through. And we have yet to hear from Kyrsten Sinema's office, except for the fact that they want to see the text. And we likely won't hear from them till the end of the week when we get the Senate to fully scrub the bill for non-budgetary items. But he was making this plea that there are a number of items in it that he thinks she can really sign up for and that she's been pushing for, especially when it comes to lowering prescription drugs, giving Medicare the ability to negotiate lower prices. Also, when it comes to taxes, something Kyrsten Sinema, the senator from Arizona, has been against is raising taxes. He says this is about just a flat 15% corporate book tax, especially for those companies that are getting a lot of these tax breaks, and also closing the carried interest loophole. He says it's about closing loopholes, not about raising taxes, but this is something she was against in the past. This is something that Joe Manchin wants to certainly see in the bill alongside many others in the Democratic Party. We'll see if this is something that she can muster through.
In terms of Nancy Pelosi, we're watching her trip in Asia very closely. We still don't know whether she's going to Taiwan, right? But the Chinese have said they'd be pretty aggressive in their response if she does.
Yes, they have been. We've heard from China's military putting out a statement which hinted that they would take an aggressive response. We've also seen over the weekend live military drills off of the Sichuan province, which is directly across from Taiwan. Now, what we do know is that today, Speaker Pelosi is in Singapore. She released a statement yesterday that outlined and detailed the itinerary of the trip. It included Singapore, Malaysia, Japan, South Korea. It didn't include Taiwan, but Matt, as you say, there's still this speculation. It is swirling and doesn't mean, because it wasn't in the official statement, that she will not make this stop. Obviously, there are some risks given how outspoken China has been about making sure they do not want her landing in Taiwan. And you can see that across really the Chinese press over the weekend and even parts of last week.
All right, well, we'll continue to watch for updates to her itinerary. Bloomberg's Anne-Marie Hordern in Washington, thank you so much. Now let's get back to the markets and take a look at some stocks we are watching in pre-market trading in the U.S. this morning, one of them being Warner Brothers Discovery. It has a new movie out, The League of Super Pets. It's an animated film. It actually topped the box office here in North America over the weekend, pulling in about $23 million. So that is leading the shares higher by a little more than 3%. You also have Boeing moving higher, and there's a couple pieces of good news here. On the one hand, the company has avoided, at least for a few days, a strike that was supposed to start today, affecting of around 2,500 workers, which would have really crippled its factories. So the fact that that is not happening today is a piece of good news. The other piece of good news comes as its approval for some tweaks to the structural issues in the 787 Dreamliner have been approved by the FAA. So that is a step forward in getting that plane off the ground, which has effectively been halted in delivery since late 2020. So that stock is up more than 3% as well. To the downside, though, basically anything tied to cryptocurrencies, because you are seeing Bitcoin taking a leg lower for a second day. One of those being Coinbase. It's down about 2% this morning. And of course, this is a stock down more than 70% year to date, Anna.
Okay, we'll keep watching that one. Coming up on this program, Melanie Baker, senior economist at Royal London Asset Management. We'll look ahead to lots of macro events this week. The Bank of England's rate decision, of course, jobs data out of the United States at the end of the week. We will also have that conversation that I mentioned earlier with the mining mogul, Andrew Forrest. He joins forces with Senator Joe Manchin. We will discuss their energy goals. Plus, Germany is caught in Putin's gas trap and running out of time to escape. Read more of today's Big Take story on Bloomberg.com or by typing NI Big Take into your Bloomberg terminal. This is Bloomberg.
This week on Bloomberg Green, the green energy of the future, how to make clean hydrogen and its benefits for the planet. Flying high, we take a look at the practical uses of green hydrogen as jet fuel.
To hydrogen fuel cell being the best approach from the cost of fuel, efficiency of utilization of the fuel, and the mitigation of the climate effects.
And from a small part of the energy picture to making it available for all. We talk the challenges and opportunities in widening access to green hydrogen.
My biggest dream is to see green hydrogen become mainstream, actually, and not just to have these little pockets of applications or these demos, but for it to really become the fuel of the future.
From Bloomberg's world headquarters in New York, I'm Kaylee Glines, and don't miss the latest edition of Bloomberg Green, airing this weekend on TV, Quick Take, and online.
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management. It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres tonight with replays all weekend on Bloomberg Television and Radio.
Welcome back to Bloomberg Surveillance. This is the early edition. We are simulcast on both Bloomberg Radio and Bloomberg Television. And we're looking at the possibility of a technical recession. So many people have been debating whether or not we're in a recession because we had 2 quarters of back-to-back contractions. Now, that has happened before. For those of you listening on radio, I'm standing in front of a chart that I guess illustrates that. But the last time it happened was in 1947. So what this chart to me really illustrates is it's been a heck of a long time since anything like that has ever happened, over 75 years. Tatiana Dare joins us from Bloomberg Markets now to talk about this. Tatiana, what do you make of the recession or not recession debate?
Yes, Matt, like you said, you know, it typically history suggests that 2 back-to-back negative quarters mean a recession, but it has happened in the past where we've had just 2 negative quarters and no full-blown downturn followed. That was in the second half of 1947. After that, the U.S. economy rebounded before falling into a full recession the following year, as defined by the National Bureau of Economic Research. But we'll have to see, the most important thing here, we'll have to see if this numbers will be confirmed, right? We've heard from Chairman Powell saying that the first readings of the GDP reports should be taken with a grain of salt. But unfortunately for markets here, we will not see the final numbers until September 29. And by then, the Fed needs to make its next move and investors need to make their investment decisions too.
Interesting on this subject, Tatiana, one of your colleagues, Simon White, writing on the Markets Live blog, that exclusively technical recessions are actually worse for stocks than ones that turn into full recessions. So maybe we should be careful what we wish for on that front. Let me ask you what you make of the Fed in the week ahead, Tatiana, because we could get some pushback from various Fed officials on what the markets did in July, essentially, if the markets were getting ahead of themselves in the Fed's view.
Yes, exactly. And we've already heard from Neil Kashkari, although he's not a voter on the FOMC, sort of pushing back on those moves, saying that the Fed has been surprised to see, this rally in stocks, this rally in bonds on the back of what still sounded like a hawkish statement and, a hawkish Chairman Powell. So I think we could see similar statements from Fed speakers here, given that financial conditions have tightened so much. I think I saw mentioned they've are now looser even, than the hike back in March. So definitely some pushback on the market reaction here to be seen from the upcoming Fed speakers. And the one to watch, I'll say, will be Bullard, because he has been the leading speaker for this Fed hiking cycle. So that's the one I'm watching tomorrow.
One to watch. Tatiana, thank you so much. Tatiana Zaria joining us there, Bloomberg Markets Live team. And for more market analysis, check out the Markets Live blog. MLIV Go is the function on your Bloomberg terminal. This is Bloomberg.
No one covers the world like Bloomberg.
You have to show action on behalf of the American people, and that's exactly what the president is doing.
The major fault line at this early stage is tax.
For the oil market, this is a big moment to see if the kingdom is willing to step in.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
The tag on the product may read Made in the USA, but the sign on the CEO's door often says Made in India. Alphabet's Sundar Pichai, Microsoft's Satya Nadella, IBM's Arvind Krishna, Micron Technology's Sanjay Mehrotra, and that's just the start. Add in the chief executives of Adobe, Deloitte, Gap, VMware, and that doesn't count Indians running companies all over the world. Why have so many Indians risen to the top? Vinod Khosla points to India's incredibly competitive education system. If you can survive the pressure it takes to get into one of the Indian institutes of technology, it gives you confidence to handle American universities and later the business world. Meanwhile, the belief in India's ability to produce so many tech wizards is reinforced every year. Indians make up about 3/4 of the immigrants receiving coveted H-1B visas for the U.S., and it's a safe bet that some of them will eventually find their way to the C-suite.
A $7 trillion industry, there's a lot of ground to cover.
Prepare for an economic hurricane.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. A lot's happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management. It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres tonight with replays all weekend on Bloomberg Television and Radio.
It's a new week and a new month, but the conversation remains on recession risks and central banks' response. Melanie Baker, senior economist at Royal London Asset Management, will be joining us next to discuss. This is Bloomberg.
The 700th anniversary of Dante Alighieri's death has triggered the work of many institutions and offered a very rich schedule of events. Today in Santa Croce, we present one of these projects that suffered a difficult start because COVID-19 has stopped the project that was shared by the Opera di Santi Croce by the Franciscan community from Florence Municipality and the Fund for Religious Building of the Internal Minister. Today, Felice Limosani's project is finally enjoyable. In the Pazzi Chapel, the marvelous architecture by Filippo Brunelleschi, the most important images from the Divine Comedy created by the French illustrator Gustave Doré. Through these images, we can live the violent emotions of hell, the weight of purgatory, and the sublime joy of paradise.
The digital humanities are a cultural occasion to exploit. Summing up, it's about merging humanistic disciplines with new technologies. I find this to be an innovating and modern tool to update culture. Cultural heritage becomes something to hand over to the new generations and not to be put aside. So it's about using technology, pixels, and binary code with a human and humanizing content.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. China's economic rebound is still fragile. Factory activity unexpectedly contracts in July, and property sales from the country's top developers continue to fall. Sporadic COVID outbreaks have led to more government restrictions, hampering the economy. The Fed renews its pledge to reduce long-term inflation to 2%. Minneapolis Fed President Neil Kashkari says the central bank will do whatever's necessary. He told CBS faster inflation is being driven by supply chain disrupted by the war in Ukraine and other factors. And the fate of the Senate Democrats' tax, climate and drugs bill may be up to one senator. For now, Arizona's Kristen Sinema isn't saying how she'll vote. The bill architect, Senator Joe Manchin, has publicly told her the measure doesn't raise taxes. I'm Anna Edwards in London with Matt Miller and Kaylee Lyons in New York. And Matt, we had this sort of divide across the Atlantic, European stocks driven higher by bank earnings. We'll wait and see whether that helps lift futures at all in the US as we go through the early part of the US day.
Yeah, absolutely. It hasn't so far. Right now, we're still looking at a drop in futures of about 0.3%. So that follows, obviously, a tremendous month of July. We were up more than 9% for stocks in July. And I think the last week of June, we were up more than 6%. So it's been a great run. If you want to call it a bear market rally, that would make sense. Although some people are now starting to say maybe we've turned the corner. The U.S. 10-year yield is up almost 2 basis points right now at 2.6667. So some gains in the yield as investors let go of that debt, meaning they're more sanguine about the recession concerns possibly. Also, the yield on the S&P is now much higher than the yield on 10 years, so that could help stocks as we get into the session today. NYMEX crude is down $2 a barrel, 96.60, so it doesn't help the oil producers, but it should help a lot of the industrials there. And then Bitcoin right now down almost 2% at $23,364, a relatively high level for Bitcoin, so maybe a little bit of profit taking, and also obviously it's strongly correlated. Kaylee, what do you see in terms of pre-market movers?
Well, with that move lower in Bitcoin, you are seeing some of those crypto-related equities under a little bit of pressure in the early hours trade here in the U.S. Among them, Marathon Digital, which is down nearly 4%, and Riot Blockchain is down more than 3% as well. And Matt, you were talking about how oil prices are a little bit lower today, trading around 96 handle on WTI. Of course, we had heard from the big oil majors, Chevron and Exxon, on Friday. They beat earnings expectations. They were just killing it in terms of the profitability of their business with not just higher oil prices, but higher refining margins as well. They're giving back a little bit of those Friday gains, though, today as prices move lower, each of them down about 0.9% before the bell, Anna.
Yep, and the European equity session, let's check that out then, Kaylee. And we are lifted by the bank earnings story, it seems, here today in Europe. The Stocks Europe 600 up by just 0.2%, so not by too much, but the bank sector doing pretty well. HSBC, you see the share price there, up by 5.7% in the London session. That helps to lift the London market overall, of course, because of the size of that stock. It is, by points terms, it is the biggest contributor to the upside of the Stock 600 today. And this is to do with higher interest rates, and this is a bank that is benefiting from those, and talking about dividends and return of cash to shareholders as well. In terms of percentage increases, the biggest gainer on the Stock 600 is Pearson. This is the online publishing business, and they beat estimates with their earnings. They are also talking about cost cuts, which some of the analysts seem to like quite a lot. The Italian 10-year yield actually just above 3% now. Earlier on, it had just dropped below 3%. We saw some strength in the Italian stock market as well as a result. There had been this conversation going on in Italy since the end of last week, when we got some news flow that suggested that the person who's most likely to take over, at least according to polling, at the forthcoming election in September, that she wouldn't necessarily rip up all the European fiscal rules. And so as a result, there's been some optimism around what that means for containing spreads around Europe, Matt.
Excuse me, just sneezing there. Okay, now joining us is Melanie Baker, senior economist at Royal.
Let me know if you need me to step in.
Yeah, well, you know what? Sometimes this happens. It's live television, but I'm fine. I'll test myself later. Senior economist at Royal London Asset Management, Melanie Baker, joins us to talk about what we're seeing in terms of the recession debate right now. Melanie, how important is it whether or not we're in a recession? I mean, as long as we're looking at, 6-7% nominal growth and 3-4% unemployment, aren't we doing okay?
I mean, I think real activity does really matter, but there is a difference between, technical recession and a kind of more serious recession. And one of the key things for me really is what happens to the labour market. So do we see recessions accompanied by significant falls in employment and rising unemployment? I think that would be a very different proposition for markets generally than, for example, what we've just seen in the case of the US, which is your 2 consecutive quarters of negative GDP growth, your technical recession.
Okay, you mentioned the jobs picture. How much then is riding on the jobs picture? We get jobs data, of course, on Friday, Melanie, and a lot of people cite that as one of the things that stands between what we have now in the US and what many people would say a recession looks like. So the jobs picture then seems very important, but others say, well, hang on, it's a lagging indicator, so how can it really alert us to recession?
I mean, there are a number of different indicators you can look at with the labour market. Some are a bit more forward-looking than others, but yes, you're right. It is, to some degree, a lagging indicator. I'd look first at employment rather than the unemployment rate. That's sometimes quite hard to read, especially when you've got a changing participation rate. But I think if you want a full picture about how serious a recession is, you really still do need to take into account that labour market picture.
Right, yes, so need to take that into account. Thinking about what's happening here in Europe, we have the Bank of England meeting this week to talk about interest rates. Melanie, how quickly do you see the Bank of England putting up rates? At some point, there was guidance from the governor himself that 50 was on the table, but then the market sees all the data coming in and isn't sure what to make of that.
Yeah, no, there's a good chance of 50 this week. I mean, my forecast assumption is that they go another steady 25. But yeah, absolutely, you're right. They explicitly put 50 on the table. And, we're still in a state in the UK where, inflation expectations still look above their long-term averages. We've still got a tight labour market. Pay growth is pretty robust. And of course, headline inflation is extremely high. So, a good chance of 50 this week.
Headline inflation also extremely high in Europe, Melanie. We saw a fresh record last week, and the 50 basis point move is on the table for the ECB at the September meeting as well. How much further realistically can they take it, given the deterioration and what is looking like an inevitable recession in the Eurozone?
It's very difficult. Central banks are in a very difficult position, but I do think we will get higher interest rates everywhere. I think they have to focus on inflation. They're inflation targeters. I don't think the deterioration of data that we've seen is enough to stop them. I think that's more of maybe a mid-2023 story.
Fair enough. So we may have some time until we actually see any pivot on the part of central banks. Obviously, as we're talking about tightening and on the part of the ECB and BOE and the Federal Reserve. In China, we're talking about loosening and whether policy will get even looser considering the weakness we are seeing in the data there. As you look at the PMIs that came out overnight back in contraction territory, how do you view the China growth story and the risk it poses to global growth?
I think it could be a real decider about in terms of how strong or weak overall global growth is. It does seem to be at a very different point in its, it has been at a very different point in its cycle than the rest of the world, partly because of what has been happening in terms of the COVID picture. And I think if I think about the second half of this year into next year, I'm still really quite worried about the China story. You know, for as long as they maintain the zero COVID tolerance, I think we have to worry about continued weak Chinese growth.
If they let that go, or if they continue to stimulate and open up, Melanie, are we looking at big demand for oil, another rise in prices globally?
The degree of stimulus just doesn't look big enough to me for that, and especially once you're offsetting that with what's going on in terms of COVID and the natural sort of dampening of demand that comes with that and the zero tolerance approach. So I just don't think we've seen or are seeing enough.
Melanie, thank you very much. Thanks for joining us. Melanie Baker of Royal London Asset Management. Coming up on the programme, mining mogul Andrew Forrest joins forces with Senator Joe Manchin. And Forrest joins us next. We will talk about energy transition. This is Bloomberg.
Knife making is almost meditative for me. There's a lot of passion behind it. There's a lot of hard work behind it. And it's not just something that you kind of just brush off like, oh, this is just a knife. People's hands touch this knife. People pour their passion and their soul inside of these products.
The art of blacksmithing has a very long history. Our notion of what it means to be civilized is to have metallurgy, to have the ability to transform the natural world.
When somebody uses my knife, I want them to say, damn! Golly, this is a badass knife. Come here, let me show y'all something.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons with Matt Miller in New York and Anna Edwards in London. Well, the climate and tax spending deal announced last week by Senate Majority Leader Chuck Schumer and Senator Joe Manchin of West Virginia would boost companies with a focus on clean energy. And Fortescue Future Industries is looking to invest in the U.S. and grow the green energy industry. Andrew Forrest, founder and chairman of Fortescue, joins us now for more. So, Andrew, as you look at the package and what is proposed, what do you think it will accomplish in terms of the energy transition here in the U.S.?
I think it'll bring on a huge new source of energy for every North American and huge new employment, particularly for the coal states, West Virginia, Wyoming, Ohio. They are now looking at really serious employment, repurposing those coal-fired power stations, those tired old assets where employment was looking pretty shaky in short term. I think we're going to turn those permanent, because that is what green energy is, of course, is permanent. So I think you'll see massive investment, real employment job growth, but most importantly, you'll see an increasing standard of living, because it'll help fight inflation for every North American.
I know Fortescue Future Industries, Andrew, is focused on green energy, but of course when I think of Fortescue, I think of mining. When I think of West Virginia and Joe Manchin, I think of mining. How did the two of you come to work so closely together?
Look, I actually met Joe at the International Energy Agency in Paris, and I just said to him, listen, you've got a real coal employment problem, but hey, Senator, there's no one in the world who's loyal to coal. They're loyal to employment. They're loyal to their communities. They're loyal to their families. That's what we got to keep going. And I really got his interest. And he said, well, how do you do that without coal? And I said, with green electrons, with green hydrogen, we can use those old power stations, all that old infrastructure, and we can drive employment, we can drive economic growth, and we can drive down inflation. But you need to support green energy, Senator, because that's the future.
And I mean, this bill, it's kind of shaky. It seems to all hang in the balance of whether or not Kirsten Sinema votes for it, or even if any senator gets COVID and can't vote, it's going to be a problem. Without this bill, Andrew, what happens to investments like yours?
Look, I think without the bill, just have to be very honest, there are other countries and other regions of the world who are offering really attractive inducements, because they all see that the world needs a huge new source of energy, which isn't Putin's fossil fuel, and that's, of course, Europe. And investment dollars will have to flow from North America, from West Virginia, into Europe instead. I just see that the natural home for large investment dollars to create a huge new superpower in green energy is North America. And if it can be sprung out of West Virginia, if it can be sprung from this anti-inflation bill, that would be historical, and that's what should happen.
It's a really fascinating prospect, and one that many countries are trying to get right, isn't it, Andrew? To take communities that have been dedicated to fossil fuels and to turn them into something else, hubs for new energy. Give us your perspective as perhaps a bit of an outsider in the US context, your perspective as to where the conversation on climate and policy is going in the US, because from the outside it can look extremely polarized, and yet every now and again progress is made.
Yeah, look, I've been into the heart of the coal belt, into the heart of those people who, and those communities and states where they're saying, oh, we're really worried about green energy, we want to stick with our fossil fuels. And I've explained to all those hundreds of workers who I've had the good fortune to meet to say, hey, what are you actually loyal to? Your family, employment, your careers, or some grotty little substance which does kill people called coal? And they've said, well, of course, we are loyal to employment. We're loyal to our families, our community. I said, right, well, then you need green hydrogen, you need green energy, because that is permanent, that is clean, and I need a lot more workers than what's currently employed by the coal industry to drive and help catalyze a huge new green energy industry in North America. And this bill brings in huge new energy. Doesn't matter if it's green or purple. What matters is that it's huge new energy. That's great for North America. It's great for the North American standard of living, and it's great to fight inflation.
And Andrew, you mentioned this as being North America's, win, something that North America can do well out of, this transition. And perhaps you suggest that if Europe doesn't keep up, it'll be Europe's loss. What role do you think that green hydrogen can play in the European energy mix? Maybe not in the very short term, where we perhaps face a crisis, but looking longer term.
Well, I think that green hydrogen in 24, 25, that's just around the corner. If I was the Kremlin trying to finance a long-term war, I'd be taking into account that huge sources of green hydrogen can fully replace my coal, my oil, my gas, which I'm relying on to bomb innocent civilians in Ukraine. That's all going to get replaced with a fuel you can't make, which is green energy, green hydrogen, green ammonia, green methanol, all from that miracle molecule. That can be all made in North America. You've got almost infinite sources of solar, wind, geothermal. It is a great place, and I think the anti-inflation and Manchin bill to really drive that new energy into the American economy is really clever. It'll steal the march on many other regions of the world. It could well turn North America into a green energy superpower. It already is in fossil fuels. There's no reason why it should not be both.
Yeah, and of course there are challenges with green hydrogen. It's pretty expensive and it takes a lot of energy to make that energy, so the scaling question is definitely there. Finally, if we could go back to Fortescue's legacy business, which is a backbone of iron ore, looking at China in particular, the PMIs we saw overnight, the further deterioration in the economy showing just how fragile that recovery is as they continue to pursue COVID zero policy. What are you seeing in that market and what the demand picture looks like?
So, Anna, just to pick up, we are working out very well how to store and transport green hydrogen. So it's a bit of a myth that there's huge scale-up issues. I am a king of scaling up. I've started a company from nothing. It's a $50 billion company. It's one of Australia's largest companies. We've scaled up new technology, which didn't exist before we started. We're doing the same thing with hydrogen. But to turn to China, you know, and I have to say that I've built a career on believing what the Chinese government says it's going to do with its economy. I don't mind, you know, what they say about their politics, their foreign relations, et cetera, et cetera. But when it comes to their economy, you've got 1.4 billion people who listen to those statements. And Chinese politicians and statesmen tend to be very accurate about that. Now, they are still forecasting economic growth. I think their zero COVID policy has been really tough on their economy, but they know how to manage themselves and they've always grown that economy for decades now, and I don't see that stopping. You know, it's not the old Communist Party of Russia, which was bloody clueless. You're talking about some of the smartest business people and well-educated business people in the world in control of that economy, and they want economic growth.
Andrew, thank you very much. Thanks for your time. Andrew Forrest, founder and chairman of Fortescue. Thank you for joining us. Coming up on this channel, we will discuss the tax climate bill with Senator Pat Toomey, Republican from Pennsylvania. That's at 10 a.m. in New York, 3 p.m. in London. So stay with us for more on that conversation. This is Bloomberg.
The public seems to have lost interest in waiting around for self-driving cars. I rode in Google's self-driving car in 2011.
Wow.
And I'm still waiting to be able to buy or just ride a self-driving car on demand. Why is it taking so long?
I think in self-driving, first of all, the opportunity is so clear. The reach is so broad. We forgot that big things do start small. We all know how to drive, but we're driving amongst humans, and you have to deal with so many little scenarios. There are so many things that you've been learning about driving since birth, and codifying that using AI, sensors, and computers is turning out to be a lot harder. Last but not least, it's a safety-critical system. None of us should deploy until and unless we have closed-loop evidence that we're safe.
A Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights
David, you just hit the nail right on the head.
from business's most influential and instrumental.
And that's the way you run good risk management. It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres tonight with replays all weekend on Bloomberg Television and Radio.
Griffin is moving both Citadel and Citadel Securities to Miami. The scoop was broken by Bloomberg's Amanda Gordon.
Welcome back to Bloomberg Surveillance. This is the early edition. I'm Matt Miller with Kaylee Lyons here in New York. Anna Edwards with us out of London. Tom Keene joins us right now, co-anchor of Bloomberg Surveillance, the original. Tom, what's your single best chart to kick off the week?
Kick off the month as well and really dive maybe into an early autumn. And it's about what is moving. And it's a surprise, Matt. It's really the one chart off the Bloomberg terminal that speaks volumes of the change of the last 6 weeks. That's the inflation-adjusted yield. This is the 10-year real yield. The stasis we remember 20 years ago with a very substantial real yield, and then the great disinflation as the real yield came down and has been amply negative. Here, up we go above the zero mark. We all made a big deal about that. And Matt, we've rolled over, and we're, this week we may test the zero mark again.
Okay, back to zero potentially. With that in mind then, Tom, who do you want to speak to this Monday?
What I want to talk to is about this great bull market. I mean, there's just no other way to put it. It's interesting to see people adjust, recalibrate over the weekend. But to have Ben Laidler with us to start off, I think is very strong. Stuart Kaiser will join us as well. And really looking forward to speaking to William Cohen. We will speak to him later in the program, the former Secretary of Defense. He's truly one of the most interesting politicians of our generation, well-timed with the Speaker of the House in Singapore.
Yeah, and will she go to Taiwan? I'm sure you will ask him about that as well. Tom Keene, thank you so much. Looking forward to the conversations over the next 3 hours. And as for what else we're looking forward to today, I will be watching the ISM manufacturing data coming out at 10 a.m. Eastern time. We're expecting it to come down a little bit to the 52 level, so that would still be expansion territory, which of course is anything north of 50. So activity is slowing, but maybe things are improving, at least on the supply side. For so long for manufacturers, the issue has been on supply chain challenges and on that end of the equation. Now the question is around demand and whether that's deteriorating as we see a softening in the broader economic environment. So we'll pay attention to that and the new orders figure in particular, Matt.
Yeah, that'll be definitely something to watch, especially as we debate about whether or not the economy is in a recession. I'm watching Nancy Pelosi in Asia just because I think this is one of the most exciting games of chicken that I've seen a politician play lately. She is clearly considering or had considered going to Taiwan. Now her silence makes you wonder whether or not China's got the upper hand, because they essentially told her, do not go there, and have been incredibly aggressive about it. So now with her itinerary released, but nothing about Taiwan, the question is, does she actually get there, or does she avoid it in order to give China the win here? I think it's going to be very interesting.
We'll continue to watch her movements then. I'm watching crop futures falling as the first grain ship leaves the Ukraine port of Odessa since the war in Ukraine began, of course. We saw that deal struck between, Turkey and the United Nations helping to bring Russia and Ukraine together of sorts to strike that deal some weeks ago. And now we've seen the first grain ship leaving. You can see on the map go function, you can see the ship involved, the Razoni, a cargo ship carrying more than 26,000 tons of corn. It is bound for Lebanon. It's due to arrive in Lebanon a little bit later on this week. There are more vessels trying to get out of the Black Sea. Can they get the insurance and the crews they need to do that, though? Worth keeping an eye on those on the map go function on the Bloomberg. That is it for early edition. More surveillance is ahead. They'll certainly be talking about the real yield, as we heard from Tom Keene a little earlier. This is Bloomberg.
I think we need to think differently about, being enough. I think, in number of different respects, I think, we're trying to either prove ourselves or do too much. I think we have to realize that, as Black people, despite what society says about us, despite, what happens, we are enough. And so I think going forward in that headspace, I think is really important.
I think the pandemic really highlighted the importance of financial literacy. And in that, it's so important to understand, okay, like how do we budget? How do we plan for, unforeseen circumstances and really make sure that we're prepared for these events in the future. And through Blockchain Capital, that's why we really place a big emphasis on financial literacy in all forms, budgeting, retirement, investing, etc.
What motivates you guys to do this?
I think it's honestly the impact that we've already seen. It's something that we just want to keep going because we've seen students come in, learn everything that we teach them, and get really successful jobs on Wall Street, really change their trajectory, their career path. And so if we can keep doing that for the next 100 years, that's something that's satisfying for me.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Right now, inflation's job number one.
Data is coming a little bit softer, but I don't think Fed is pivoting here. I don't think the market is pivoting.
Investors should recognize that there's been a lot of ups and downs in the economy in this quite fast-moving cycle.
We have to remember that the market already priced in a lot of damage.
A recession is still the most likely outcome here, and I think it's too early to be calling a bottom in equities.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Where did July go? Live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Futures negative 0.2% on the S&P. TK, what a rally through the month of July.
It really is. We start strong with Ben Laidler, who's really going to give us a tone here against the Bears. And the Bears, John, as you know, reaffirming. I thought Mike Wilson's note with Morgan Stanley was fascinating, John. He reaffirms in a slowdown, guess what? At some point, their earnings view declines.
And the downgrade should come through, and come through fast, Tom, in a recession. That's his whole point of view. At the moment, though, we can dream, to use his words, and we are dreaming, aren't we, TK? Going into the data, payrolls this week, CPI next week.
Dream of a better future, and it's going to be a data-dependent Fed. Forward guidance out the window, so every data point matters, John, and we're going to see that. Payrolls, you got to pay attention there. Will the labor economy break?
Every Fed speech matters right now, and Lisa, over the weekend, Neil Kashkari of the Minneapolis Fed spoke twice, pushed back against this euphoria that somehow this Fed pause is coming sometime soon.
And we're going to expect a lot more of that. We heard a tentative or more tentative kind of tone out of Raphael Bostic on Friday. This really is the key pushback that Fed Chair Jay Powell said that we are close to neutral. We are getting closer to getting that rate closer to where it needs to be for this economy. I'm looking at the real yield on two-year bonds right now. It is negative 0.3%. We still have negative real yields in the United States at the front end at a time when you've got the fastest pace of inflation going back for 40 years.
Real yields, they topped 2 days before the equity market bottomed, June 14th. It's been the story, hasn't it? As soon as that started to fade, we started to kick higher much more aggressively in this equity market.
This is the conundrum in my view. We have had earnings in some cases that are better than expected. However, how much does that even matter when it's all about the Fed, all about restrictive rates, and where we are in a cycle?
It's not. It's about corporations adapting and adjusting. And John, that's what we've seen in the last 6 weeks.
Brahma's got things to say, Tom.
I don't agree with this. It's all about economic stuff. It's about corporations adapting and adjusting given the slowdown, given the end of the pandemic.
And I'm sorry, but John, we will get on with the show and do price action. But Tom, how much are we looking at, yes, earnings, but at the same time, the greatest rewriting of where we are in terms of Fed policy going back for years? That is what we've gotten over the past month in terms of the rally.
There's no question about it, and it deserves a road trip this August out to Wyoming.
We are going on a road trip this August out to Wyoming. That's actually happening, Tom. That's one of the few things you've asked to happen that will actually happen.
Really?
Should we get a look at the price action?
ECB's after
Let's do that right now.
Let's do that
Negative 0.2 on the S&P. On the Nasdaq 100, we're down by 0.2% as well. Yields coming up about a basis point to 265.77. Larry Summers with David Weston over the weekend. Jay Powell said things that, Lisa, to be blunt, were analytically indefensible. What a quote.
And how much is that talking exactly about where we are in terms of close to neutral? Because that has been the biggest pushback. Bill Dudley categorically disagreed with that. That has been an area where people say you gave a dovish message to a market that was hungry for one, and you are totally mistaken in doing so. As far as where the economy is, we're going to get a lot of data this week that's going to give us some insight, including at 10 a.m. U.S. July ISM manufacturing. We're also getting June construction spending, but the manufacturing is going to be really interesting, especially after that Chinese data overnight that showed an unexpected contraction in the factory outputs. How much do we see an ongoing grind, an ongoing withdrawal from a sector that has been on fire since the pandemic? And how much does this bleed into some of the expectations for a downturn globally? Today, House Speaker Nancy Pelosi begins her Asia tour. She will be in Singapore. The big question, of course, is Taiwan. Will she be going there? There are a whole host of other nations. She hasn't put it on the list. How much is this going to be a flashpoint, an unnecessary one that continues to really put her and, frankly, the Democratic Party in a real bind at a time when Joe Biden is trying to celebrate a legislative win? And today we do have an earnings continuation after 56% of the S&P have already reported. We get, of course, Zoom info as well as Avis budget, but I'm watching the shale space. Devon Energy, Williams & Company, and Transocean all reporting earnings after the bell. There is an expectation, John, for the shale players to report record profits, possibly recapping some of the decades of losses that they've been incurring. How much does that really restart some of the production versus just simply paying back debt and really being prudent and just cashing in at a time when oil prices are as high as they are?
Very cool, Lisa. The day ahead, the week ahead gets bigger as we climax with payrolls Friday later this week. We just got this in from Bill Dudley, the former New York Fed president, publishing on Bloomberg Opinion. Investors have lately become strangely optimistic that the Federal Reserve won't have to tighten monetary policy much further. He goes on to say, Tom, this wishful thinking is both unfounded and counterproductive.
It's a short, sharp note. It's a good summary. It's a particularly good summary, John, for those that disagree with Dr. Dudley. I mean, there's a whole school of thought out there that this is a Fed that can, thread the needle's a cliche. He says there's no threading of the needle. This is what they have to do. Inflation is the priority.
Looking forward to catching up with Bill maybe later this week. Let's catch up with Ben Laidler, global market strategist at eToro. Ben, best month of gains we've had on the S&P going back to November 2020. Ben, we all want to know your view. Is this the real deal?
We've seen a classic sort of climbing the wall of worry, right? I mean, we had a terrible June. Sentiment got super bearish. Everyone was freaking out about, an earnings collapse, a consumer collapse. And hey, guess what? It hasn't happened. That's not to say it's not going to happen. We're still in this race between a peak in inflation and what will probably be a mild recession if it happens. I do think the bottom is in. I think the question is still out there as to the sustainability of this recovery. A lot of that is going to depend on how quickly inflation starts to come down in the next couple of months. Those lead indicators, those commodity prices, those inflation break-evens say that we're at the cusp of that. But that's really the question that's going to determine the sustainability here.
Ben, I went back and I looked at December of 2018 when Ben Laidler at HSBC made one of the all-time great calls on the equity market. Then there were 6, 7, 8 reasons not to be in the market. Forget about 6, 7, 8 reasons. What's the key reason now to be in the market versus the 47 ideas of gloom that we've got this morning?
Markets are forward-looking, right? That's what we always forget. That's what we forgot back in 2018. That's what we forgot at the sort of March low in 2020. Wall Street is not Main Street. We're looking 6 to 12 months ahead. We're looking to the top of this Fed cycle. We're looking to potentially some interest rate cuts. We're looking essentially to the consumer and the corporates outlasting this inflation scare. Now, again, there are risks around that. But if we see inflation peaking in the next couple of months and beginning to come down, I think markets are going to keep moving ahead of that. Earnings, you know, we've had what? 0.5% off 2022 earnings expectations in the last month. This is not capitulation. Now, we're halfway through earnings. We'll see. But the story right now is the consumer, corporates, been very, very resilient. And if inflation does peak in the next couple of months, as those lead indicators tell you, I think to borrow the hackneyed phrase, I think we could thread the needle.
Ben, I'd love you to weigh in on the Monday morning tiff that Tom and I were having about whether this is more about macro or more about companies being able to adapt and adjust to the realities that they face. Which is the more important factor right now to understand, yes, perhaps the bottom is in, as you said, but just how much more pain from here we could see or whether we trade sideways? Is it going to be inflation rolling over, the Fed communication, or is it going to be just the individual companies and what they report?
There's only two ways to make money in markets. It's valuations, which have been absolutely crushed this year, which has been all about inflation, the Fed, the discount rate, the bond yields, and earnings, which have been absolutely rock solid, down 0.5% for the 2022 expectations in the last month or so. If those numbers keep hanging tough, as I think they're going to, then we survive. But your average recession, those earnings come off 20%. So that's your downside. That's a shoe that hasn't dropped yet. That's what the market is, was very afraid about, coming into second quarter earnings, and that's been the relief so far. Now what we're looking for is, can that relief continue? And I think that does need the macro, that needs the inflation fears to cool, and that leads a validation of this expectation that the Fed takes its foot off the pedal.
So, Ben, I think this is the word that's in the Dudley column today that jumps off the page to me. Counterproductive. Is this rally at this point, this easing of financial conditions, counterproductive and something this Fed needs to push back against?
Yeah, the Fed hates this, right? I mean, the market was doing their job for them. It was tightening financial conditions, mortgage rates were going up, et cetera, et cetera. That's all reversed in the last sort of month or so. So I would fully expect, every Fed governor worth his salt to be out there trying to talk this market down. And yeah, hey, we should probably see it, right? I mean, but I do think the bottom is in. I do think there's more upside than downside. This is a U-shaped recovery. We're going to bounce around until we get the validation that inflation is coming down. Then I think we're going to grind higher. I don't think this is a V, this is a U, but I do think the bottom is in here.
Hey, Ben, great to catch up, sir. As always, Ben Lader there of eToro. Just continuing to read this column from Bill Dudley this morning, Tom. All told, the outlook hasn't changed. Inflation is too high, the labour market is too tight, and the Fed must respond, most likely by pushing the economy into an actual recession.
And to Jobs Day on Friday, I mean, John, it's No News Monday. Let's be honest. Folks, it's No News Monday. It's the summer. We've broken the heat wave on the East Coast. We're all feeling better about it. I actually got below 59th Street this weekend, John.
Congrats, Tom.
I thought, the statue outside Rockefeller Center almost started shaking.
That's how far down you got.
Yeah, well, I got to, near Saks. But anyways, John, Friday's a big deal. It's No News Monday, I get it. But Friday is a serious, serious jobs report, and that's what matters to Dr. Dudley. The idea, does the labor market crack, or do we get wage inflation? And that's the fear overlaying the need to get back to 2-ish%.
One thing we're looking for, Lisa, on Friday is just a step down in payrolls growth, just a slight deceleration, something in and around the 200s.
That's going to be the most important figure of the week. And initial jobless claims of increasing importance, because that seems to be the data point that this Federal Reserve is most keyed into, because that was the one that they highlighted was still resilient and sort of the reason why they could continue to raise rates as quickly as they previously wanted to.
I'm looking for the manufacturing data a little bit later this morning.
Looking forward to that.
John,
PMIs out of China, Tom, they were not pretty.
They weren't, but explain this, John, because there's a lot of people that are like, what's he talking about? Why does that data this morning matter?
This morning, last week, or rather 2 weeks ago, I think it was, we had a negative sub-50 PMI manufacturing. We need to look out for the ISM to see if it confirms that, or rather that was services, Tom. So services later this week,
John.
Manufacturing today.
Crystal Palace, Arsenal,
I knew you wanted to do that. I knew you wanted to do that.
It's so much better than in America. They just start playing.
They do. Next weekend, the league begins. And congratulations to the Women's England football team, Tom. If you're going to bring up sport, you've got to go there.
Yeah.
For winning the European Championships. We've got to go. We're down 2/10 on the S&P. We're down 9 points.
Road trip.
This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. The architect of the Democrats' tax, climate and drugs bill, Senator Joe Manchin, is lobbying colleague Kristen Sinema to get on board. Manchin argues that the measure does not raise taxes. Sinema has not divulged whether she will indeed support the bill or not. She has the power to sink it. China's economic rebound remains fragile. Factory activity unexpectedly contracted in July. Meanwhile, property sales from top developers continue to shrink. Sporadic COVID outbreaks have led to more government restrictions hampering the economy. And the Bank of England is expected to step up its fight against inflation in the coming week. On Thursday, it's likely to join some 70 other central banks in raising interest rates by a 0.5 percentage point. That would be the UK's biggest rate hike in about 27 years. And shares of HSBC are rising. Second quarter earnings were better than expected, and the bank promised to resume paying quarterly dividends next year. HSBC is pushing back against a call by its largest shareholder, China's Ping An Insurance, to split up. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
To name a couple of your babies. I don't know if I'm asking you to choose amongst your children, but you know, some of the most recognizable buildings by you, of course, the Millennium Bridge, London City Hall, the Reichstag, and the Great Court British Museum. What was your favorite project to do?
The Reichstag does stand out because, first of all, it's an energy manifesto. So it transformed something that was dependent on fossil fuels. It uses all the technology to produce something which is essentially carbon neutral. And as a public building, that's a statement. It's a symbol of a city, it's a symbol of a nation. It incorporates works of art. It's recycling an existing building, which, as I mentioned earlier, is the ultimate in sustainability. If you can give a new life to a building, it also creates public space at the roof level. It's the most visited parliament in the world, so it puts the public above the politicians who are answerable to them. And that, of course, was made possible by the politicians. So it's a demonstration of democracy in action.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
lot's happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres tonight with replays all weekend on Bloomberg Television and Radio. In a $7 trillion industry, there's a lot of ground to cover.
Prepare for an economic hurricane.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. Season is here.
Everything I've read has just got the R word. Resilience, not recession.
Earnings are expected to be so weak that I think that presents a very intriguing opportunity.
Bloomberg breaks the numbers first.
We get a deluge of earnings globally this week from Alphabet and Microsoft.
With exclusive expert analysis.
These earnings have proved to be really inconsistent, not actually showing a real picture that goes one way or another.
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
To do everything we can to try to avoid a recession, but we are committed to bringing inflation down, and we are going to do what we need to do. And we are a long way away from achieving an economy that is back at 2% inflation, and that's where we need to get to.
Neil Kashkari there, the Minneapolis Fed president on CBS over the weekend. Amazing that every single Fed watcher, dedicated Fed watcher, is basically saying the same thing. That this Fed has to push back against some of this price action. Futures right now, negative, softer, down 0.2% on the S&P after a really strong rally after the last month on both the S&P and the NASDAQ too. The NASDAQ just a little lighter, softer, lower, down 0.2%. Tom, yields up about a basis point, 265.59. There is some dollar weakness out there.
Yeah.
Euro dollar, middle of the pack in G10, positive a third of 1%, 102.57.
On DXY from 107, 108 down to 105. So there is finally a real dollar weakness. You don't see it in some of the EM currencies, but nevertheless an interesting tape and becoming more interesting off the economic data John mentioned that we'll see here on August 1. It is August 1 in Singapore. It is the evening. Of course, they are through their day. Anne-Marie Horton knows this, our Bloomberg Washington correspondent, because there is the reality of the Speaker of the House, the travel plans of her and her contingent, and also the United States Navy. The 7th Fleet is in the Indo-Pacific area, led by the USS Reagan, the Benfold. The Tippecanoe is an oil kind of ship that refuels at sea. Anne-Marie Horton, how is the United States Navy helping Speaker Pelosi on her trip?
Well, the question is whether or not they're going to be needed to help her, right? And the question is whether or not the speaker will go to Taiwan. Overnight, Kyodo News in Japan is citing Taiwanese media that says that Speaker Pelosi is set to visit and travel there tomorrow evening. Of course, we have not heard that from the speaker's office. They released a statement over the weekend detailing the itinerary of this trip. Singapore was on it, Japan was on it, South Korea was on it, but there was no mention of Taiwan. And again, the foreign ministry in China was asked about this, and they said they would not sit idly by. So it has become a quite tense moment if the speaker was going to Taiwan, and obviously there's political risks for both Beijing and Washington.
The niceties of this, Anne-Marie, and James Stavridis and Elliot Ackerman have this in my book of the summer last year, 2034. It is about geography. Taiwan is 245 miles long, and the niceties of this is, do the U.S. ships go up the west coast, the populated side of Taiwan, or do they go outside to the east side of Taiwan? Is the speaker aware of how the Pentagon is having to adapt to her plans?
Well, the president was pretty frank when reporters asked him about this, and he said the military doesn't think it's a good idea for Speaker Pelosi to
Can they overrule her, Anne-Marie? Can they overrule her?
The White House can't. The White House cannot. The White House says this is the speaker's prerogative, her travel plans, right? But obviously she's going to be in touch with the military, right? It's escorting her if she was to go there on this trip. And they're going to do everything they can when there's high-level individuals from United States officials traveling around the world. They are always involved. One thing is, of course, interesting. Over the past year or so, there have been more incursions into Taiwanese defense space. There has been more intercepts. The FT had an interview with General Milley talking about this. There's also, of course, been the fact that the Chinese military is now saying that the Taiwan Strait is not international waters. Yeah. This potentially speaking to your point, Tom, of which way the Navy goes.
Anne-Marie, there have been reports about how much the Chinese military has been built up over the past decade, in particular their Air Force, and that it's unclear that Taiwan, and even aided by the U.S., could win if China decided to invade and to grab that land and the sovereignty therein. How much is this weighing on Taiwan in terms of whether they actually want Nancy Pelosi to come?
Right. Well, I think for Taiwan, Speaker Pelosi would be a huge testament and statement to what many in Taiwan want, which is independence. But you bring up a point of, I don't think there's many people that want to see another massive conflict already when the world is dealing with Russia's invasion of Ukraine. When it comes to Taiwan, of course, this whole year we've seen the White House make statements, or the president make statements, and the White House have to walk it back, most notably in May when he was in Asia, saying they would defend Taiwan, they would send weapons to Taiwan. Some of that had to be walked back. It comes at a really critical time because it's difficult for Xi Jinping in this moment to potentially not make some sort of dramatic movement. He's pushed a little bit by nationalists. He's suffering economically, domestically. And of course, in 3 months' time, he's going to get this president-breaking third term. So this is really a critical moment for him. And a lot of this could be deflecting, but it does risk potential errors.
Anne-Marie, AMH down in DC. Anne-Marie, thank you. We caught up with Isaac Boltanski last week on this, Tom, and he just said, lose-lose. The guy over at BTIG, the team there, Tom, just calls it lose-lose right now. Whatever decision that the speaker makes, it's a lose-lose situation.
I've sort of always felt, John, over the years, and this goes back to all the tensions, even before Nixon, Kissinger, that it is so far removed, so complex, and so unknowable that she's intruding in this around maximum uncertainty. And that's the only thing I can say. There's so many different levels of uncertainty.
Well, I think the number one thing we've got to do this week, Tom, is not just talk about the foreign policy. We have to talk about what's happening domestically in China at the same time. Lisa, there are others that believe, in fact, many people who believe that President Xi is doubling down on tension abroad because of what's happening at home. And what's happening at home is not a great situation for the Chinese president. Manufacturing over the weekend was sub 50 on the official PMI. That's contraction. We've heard of this so-called mortgage boycott spreading. That's a tough situation. COVID zero. In China, we're living in 2020 and it's 2022. There are many, many things domestically that are putting this leader under pressure.
Especially because, just talking about the factory output, that was the official data, which usually is massaged. The fact that they're acknowledging a contraction there is telling. When it comes to the mortgage crisis and the mortgage issue that China is facing, they're looking at about a third of the overall debt attached to these housing, to the homes, actually being non-performing and problematic. This is becoming a serious issue for their banks. This is becoming a serious issue for their economy. People are really struggling to understand how China's going to address this.
So, Tom, when we think about the instability abroad, we have to think about just how stable things are at home for this leader.
Elizabeth Economy's been out front on this, John. I mean, I can't say enough about Liz Economy's at work in her book, The Third Revolution. He's far more fragile than the homogenous view that we see him by. And, of course, this goes into the November meetings of the party.
We'll follow the plane through the week, as I'm sure many of you will. Ed Morse is going to join us a little bit later, the global head of commodities research over at Citi. He was looking for a move lower on crude. We got it. He's potentially looking for a bigger move than this one. 96.90 on WTI. We're down by 1.74%. From New York, this is Bloomberg.
This week on Bloomberg Green, the green energy of the future, how to make clean hydrogen and its benefits for the planet. Flying high, we take a look at the practical uses of green hydrogen as jet fuel.
To hydrogen fuel cell being the best approach from the cost of fuel, efficiency of utilization of the fuel, and the mitigation of the climate effects.
And from a small part of the energy picture to making it available for all. We talk the challenges and opportunities in widening access to green hydrogen.
My biggest dream is to see green hydrogen become mainstream, actually, and not just to have these little pockets of applications or these demos, but for it to really become the fuel of the future.
From Bloomberg's world headquarters in New York, I'm Kaylee Glines, and don't miss the latest edition of Bloomberg Green, airing this weekend on TV, Quick Take, and online.
No one covers the world like Bloomberg.
You have to show action on behalf of the American people, and that's exactly what the president is doing.
The major fault line at this early stage is tax.
For the oil market, this is a big moment to see if the kingdom is willing to step in.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
From New York City this morning, good morning. Equity futures slightly negative, down 0.2% on the S&P. On the Nasdaq 100, down about 0.25%. Massive month of gains last month. The S&P 500 with its biggest month of gains going back to November 2020. Big month for the market, not so great month for the economic data, leading some of you to price in potentially a slower Fed, reinforced supposedly by the communication we got from Chairman Powell last week. And this is what it means for the bond market. 2s, 10s and 30s for a second straight week last week. Two-year yields declined this morning, up about a basis point to 289.85, even with Neil Kashkari over the weekend, the Fed president from Minneapolis, pushing back against this idea that the Fed might be done sometime soon. He's not alone. Others will follow. How will this bond market respond? I can tell you how foreign exchange is responding right now. Based on the developments of what's happened in the bond market, push it through FX, and euro-dollar looks a little something like that. We've had 4 straight days of dollar weakness now in the dollar index. Euro-dollar positive by 1/3%, Tom, to 102.57, and the euro is not alone. The yen's looking stronger, the euro's looking stronger. Pretty much everything in G10 is stronger against the weaker dollar this morning.
Some of the cross rates are interesting. Euro Swissy really doesn't give it up. It is a little bit weaker Swiss, but to watch the mix there, I think, John, is important. John, I know the big equity market. I just want to report that the variance on the triple leveraged all cash fund was, unched.
Have you dabbled, Tom? Have you thought about maybe rotating
I looked
out of cash
at it. I had the buy side ticket out. I walk around, folks, after the show with sell tickets here and buy tickets here, like the wonderful Ace Greenberg, and I couldn't pull the trigger.
That's the end of the bear market rally, Tom, when that starts.
June 18th.
We're all waiting for it. We're all waiting for it.
Couldn't do it. Futures -9 and the VIX off the 21 level, 22.32. This is a joy. Edward Morris defines a global oil analysis. He's head of commodities research at Citigroup. Let's get right to it. Ed Morris, I want to talk about demand responsiveness or demand elasticity nation to nation. Is the demand dynamics of less demand in the United States the same as the demand dynamics, say, in Germany or Singapore?
Absolutely. European economic conditions are worse than they are in the U.S. Compound that with the higher price, and yes, we're not seeing any demand growth in Europe. We're not seeing very much demand growth around the world. It's just prices are too high, and even though they've come off, the gasoline prices have come off. The continued strength of the dollar, even though, as you noted, it's weakening, and just this sheer high price is deterring people from using the car as much as they were in the past.
Do you assume out of the bulls, and you've been right in the last number of months, Ed Morse, do you assume that demand clicks in if COVID is solved in Asia?
Well, certainly there's one level where demand will absolutely kick in, and that's jet fuel demand. China is a very large user of jet fuel. They've shut down international travel, so they're down about 1 million barrels a day from where they've been just on the jet fuel side. So yes, we do expect a year from now, all else equals, that we're going to see significantly more jet fuel demand. We don't see that happening, by the way, in the other transportation fuels. We think gasoline and diesel are likely to remain weak unless there, for some reason, there's going to be a rebirth of global trade and some shot in the arm to get people driving again.
If this is the case, Ed, why are we not seeing inventories build more?
Well, we are seeing inventories build. The problem is they've been at such a low level. That's one of the problems. The other problem is that when we look back at the second quarter, there was a good inventory build, but most of it took place in China. We had a month and a half in which real demand was down about 1 million barrels a day, a little bit more. And we had inventories building because there was another 1 million barrels a day of imports coming out of taking advantage of the low price of Russian crude and actually stock building. We had a lot of imports of Saudi crude, up around 700,000 barrels a day alone, 1 month after the other. So the inventory build in Q2, which is unevenly distributed, we're seeing actually an inventory build west of Suez right now. We're just not seeing it in the U.S. The U.S. is in this bizarre position of being not one market, but 3 or 4 different markets. We are an open market. We can't export other than by pipeline. And I use the word export euphemistically. We can't export from the Gulf Coast to the East Coast. We can export to Europe and other places. The turning away from Russia by European countries and companies have had them turning to the United States. Last week, the data from the EIA had U.S. exports at a record high of 10.9 million barrels a day growth, 10.9 million of including well over 4 million barrels a day of crude oil. So we're having the kind of discontinuities in the market, pulling oil out of the U.S., going into other parts of the world, but there definitely is weakness on the inventory side, and we're seeing that in the level of backwardation. Prices have gone down, prompt prices are going down when it comes to crude at a faster rate than deferred prices. The difference between the prompt month and the second month is narrowing, and we're seeing flows coming out of commodities. The liquidity of the market is low, and it's getting lower as people are abandoning commodities for other assets at the moment.
One of the reasons why the oil picture has been so complicated, Ed, is because of how much it does hinge on the zero COVID policy in China, how much it hinges on whether that Russian oil can actually move around more consistently or actually not at all, whether it's restricted more. How much do you change your parameters? How much do you change what your base case is for the price if, say, China does reopen, or if we do get some sort of continuing of a steadying in the global economy?
Well, we do have that as a contingency. We think the bigger risk on the upside at the moment is not a change in the economic situation globally, but rather we understand the fragility of exports in some countries. It's not just Libya, which has gone up, by the way, by 700,000 or 800,000 barrels a day in the last couple of weeks. How long will that last is a bearish factor in the market. Will we be seeing disruptions to supply there again? Also in Nigeria, we're noticing that Iraq has not yet had a government since the elections of last October. We've had the Parliament House occupied twice by protesters worrying about a government that's going to be too close to Iran. The likelihood of disruption risk in both Iran and Iraq is not exactly zero. So there are bullish factors that are hanging over the market.
Ed, I don't want to catch you unawares on this, and if Citigroup has a banking relationship, please speak up, and I apologize. Moments ago, we have a headline that Aramco will take out the global products division of Valvoline. Folks, Ed Morris and I are the only ones in financial media that actually used a can of Valvoline in the first car we were allowed ever to do an oil change in. There's a romance here of the troops from Lexington, Kentucky. Discuss the synergies of a giant like Aramco with something that's so absolutely iconic in America.
I can't speak to the synergies. I can speak to a company that, as my own colleagues who report on Aramco have noted, is awash in cash. and is under pressure to spend in. And there are market niches that are highly profitable that companies like that go after. So without speaking to this iconic issue, I think it just has to do with what the extraordinary cash flow and cash position of that company is, looking for good investments to make.
And do you see this to continue across all of big oil? I mean, we think of Exxon and XTO, but is this the future of an oil awash in cash?
Well, the question is, how long will oil companies be awash in cash? We've had very unusual crack spreads at the moment. A significant amount of that profitability doesn't come from the price of oil itself. It comes from other things in the market, and particularly the strength of the product markets. The strength of the product markets is very unusual. China has a massive role to play in it. China, as I noted earlier, was building inventory. They're not only building inventory, but at the same time, they've cut out exports of product, and particularly diesel. A year ago, they were exporting 700,000 barrels a day of diesel. It's now zero.
Yeah.
That 700,000 barrels a day, if it were in the market, and if there were some other adjustments, would bring that cracks in the refinery margins, the profitability of refining down significantly.
Ed, before we let you go, what's your base case for how low oil prices could go in the next 6 months?
Well, our base case is for oil to continue to drift downward. It's seeing Brent in the mid-80s and WTI in the low 80s for year end, and then continuing on that path into the months of 2023.
Into the 80s, low 80s year end. Ed Morsa City, thank you. Lisa, low 80s year end.
How much does that alleviate? Yeah, how much does that alleviate some of the pressure? I mean, we've seen steady drops in the price of gasoline. People have pointed to that and an increase in consumer sentiment, which we saw on Friday. How much does that continue to edify this bullishness that we're seeing, that the Fed's going to be able to move away, that inflation data is going to roll over? This has been really one of the linchpins for some of the recent optimism.
We've been looking for the pullback in headline year-over-year inflation for the last couple of months. We've been talking about peak, mechanical peak year-over-year inflation. Then Lisa, it kept climbing and we got a 9 handle. This time around next week, we're looking for that again. Tom, the focus, as you know, though, is on core month over month and what we're seeing happen in rents at the moment and how stickier, how much more broader this story has gotten over the last few months is concerning for a lot of people.
That was the number one thing, John, I focused on before I went on Hulls, and I'll just tell you that to me the rent dynamic is the most important mix there of core, non-core, Dallas trim, and the rest.
How was the long weekend, Tom?
It was exhausting. I mean, you know, I just, you know, you take that amount of time off.
A single day.
You really don't. It doesn't really click in. The stress doesn't fall away until something in the vicinity of cocktail hour.
You've adopted the word holds, Tom, but not the full culture of the UK and
that was an American Halls there, John. I took a day off.
A 3-day weekend into the summer, Tom. Impressive. Futures on the S&P down 0.2% on the Nasdaq 100. We're down about 0.25%, pulling back from a pretty tasty rally over the last month. What a move we've had on the S&P, the biggest month again since November 2020. Quite a rally off the June 16th lows on the Nasdaq 100 too. Yields higher by a single basis point. Your 10-year 265.77. A lot of data coming up this week. Good morning to you. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Rishika Gupta. China has again warned that its military would take action if House Speaker Nancy Pelosi makes a landmark visit to Taiwan. A spokesman said the People Liberation Army, quote, won't sit idly by if Pelosi travels to the island. She's currently in Singapore. Pelosi's itinerary did not list Taiwan as a stop. And President Biden is isolating at the White House after testing positive again for COVID. He has a so-called rebound case that's seen in people who take the antiviral drug Paxlovid. The White House says the president is not experiencing any symptoms. And in eastern Kentucky, the death toll from massive flooding has now risen to 28, and the state says more fatalities are expected. Rescue and recovery efforts were slowed Sunday by up to 4 more inches of rain. About 400 people have been rescued by National Guard helicopters. And Lufthansa could face more turmoil. Pilots at the German airline have voted for strikes if they're considered necessary to get a new wage deal. That could lead to another round of flight cancellations. Walkouts could take place this month, which is one of the busiest for the European travel sector. And shares of HSBC are rising. Second quarter earnings were better than expected, and the bank promised to resume paying quarterly dividends next year. HSBC is pushing back against a call by its largest shareholder, China's Ping An Insurance, to split up. And Bill Russell is being remembered as the greatest winner in the history of basketball. The Hall of Famer died Sunday. Russell won 11 NBA titles in 13 seasons. He also won 2 NCAA titles at the University of San Francisco and an Olympic gold medal. Bill Russell was 88. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
On the product may read Made in the USA, but the sign on the CEO's door often says Made in India. Alphabet's Sundar Pichai, Microsoft's Satya Nadella, IBM's Arvind Krishna, Micron Technology's Sanjay Mehrotra, and that's just the start. Add in the chief executives of Adobe, Deloitte, Gap, VMware, and that doesn't count Indians running companies all over the world. Why have so many Indians risen to the top? Vinod Khosla points to India's incredibly competitive education system. If you can survive the pressure it takes to get into one of the Indian institutes of technology, it gives you confidence to handle American universities and later the business world. Meanwhile, the belief in India's ability to produce so many tech wizards is reinforced every year. Indians make up about 3/4 of the immigrants receiving coveted H-1B visas for the U.S., and it's a safe bet that some of them will eventually find their way to the C-suite.
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From business's most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic. We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres tonight with replays all weekend on Bloomberg Television and Radio.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Knife making is almost meditative for me. There's a lot of passion behind it. There's a lot of hard work behind it. And it's not just something that you kind of just brush off like, oh, this is just a knife. People's hands touch this knife. People pour their passion and their soul inside of these products.
The art of blacksmithing has a very long history. Our notion of what it means to be civilized is to have metallurgy, to have the ability to transform the natural world.
When somebody uses my knife, I want them to say, damn! Golly, this is a badass knife. Come here, let me show y'all something.
I think Jay Powell said things that, to be blunt, were
analytically indefensible. There is no conceivable way that a 2.5% interest rate in an economy inflating like this is anywhere near neutral.
Was that the diplomatic version of Larry Summers there? Larry Summers, the former U.S. Treasury Secretary,
He's on
speaking
better
to David
behavior with Weston than he is with me.
on Wall Street Week over the weekend. He was pretty blunt. Yeah. Let's be blunt about that.
That's not
Futures
diplomatic.
down 0.2% on the S&P. On the Nasdaq 100 down 0.25%. Yields higher about a basis point, 265.95. Got a ton of economic data this week. It concludes with payrolls on Friday. Next week, August 10th, we get CPI in America. We have to talk about foreign policy too. A lot of people wondering whether the Speaker of the House will go to Taiwan. CNN reporting the following. Here's the lead paragraph. U.S. House Speaker Nancy Pelosi is expected to visit Taiwan as part of their tour of Asia, Tom, according to a senior Taiwanese government official and a U.S. official. I stress that is CNN reporting, Tom, and that's the latest I've seen.
1,900 miles from Singapore up to Taiwan, and to give us perspective, we rip up the script. We were going to speak of Europe with Tina Fordham, geopolitical strategist and founder of Fordham Global Foresight. She has been fabulous with us over the Ukraine war. But Tina, I've got to turn to this. We talked with our Anne-Marie Horton about it earlier. The Pentagon has to adapt to this. With the USS Reagan and the 7th Fleet, it does harken back to Nimitz in a different time and place. But our big trap here is nostalgia or history. What is the new, what is the distinction in 2022 about China, the U.S., and Taiwan and Formosa?
The way that I look at this, Tom, is that one of the byproducts of the pandemic was that both China and Russia looked at the United States and Europe and really made the conclusion, drew the conclusion that we had weakened and were open to testing our boundaries, right? Our willingness to defend Western long-standing security relationships and alliances. I think that the White House has been pretty bold in wanting to push back on Putin. We've seen this with the eventual move to arm Ukraine, and the same thing with Pelosi's apparent move to visit Taiwan. A lot of people will see it as a provocation, but from my own perspective, looking at geopolitics through a security lens in this case, continuity and no daylight between U.S. positions will be very important for reinforcing resolve.
With all of your abilities, Tina, does the U.S. have enough material, enough forces, enough military on the Pacific Rim?
Well, at the moment, to fight a conflict, I mean, that's a different question from what's happening here, which is the kind of diplomatic choreography of putting your money where your mouth is, right? So both sides have increased the number of patrols, exercises, and everything else, but the U.S. has a strong military presence in Asia. That hasn't changed, and it certainly hasn't changed as a result of the Ukraine conflict, right? The U.S. hasn't redeployed forces on that one.
Tina, we've been reporting all morning that China has warned that their military will not sit idly by as Nancy Pelosi does head to Taiwan if this report by CNN is in fact true. What do you expect their actions will be?
I think it'll be an intensification of what's been evidence for the last several months. I mean, in my view, this move from Nancy Pelosi comes because U.S. intelligence have been warning that they believe that China is closer to making a move on Taiwan, perhaps in the next 18 months, than it has been for some time. I think that will come as a surprise to a lot of investors who had believed that the war in Ukraine might prompt China to take a rest. It's why I say that the signals coming from Washington, from even the Supreme Court, about the strength of the United States resolve, the strength of U.S. democracy, are being watched very closely to see if indeed Washington can respond to numerous threats.
Given the military buildup and given the fact that China has invested quite a bit in its military, how much does the U.S. view that China as having a more advanced, a more complicated role, and a more difficult opponent if there is an altercation versus a weakened Xi Jinping in light of some of the domestic challenges?
I think that there is a big distance to travel between sort of telegraphing to China that the U.S. is ready to defend its longstanding positions and that it's willing to engage in state-to-state conflict. Neither side wants to do that. That is clear. But we should go back to first principles. China has always wanted to be the regional hegemon and has objected to the U.S. military presence. And the U.S. going back, over a century, has said it doesn't accept the notion of regional hegemons to start with. And that's what both Russia and China have in common.
And Tina, just to put a bow on all of this, how did we get to this point? Where did this meeting come from, this potential visit from the speaker?
My understanding is that this trip was booked for before Nancy Pelosi had COVID. This is exactly the kind of sort of low-cost diplomatic option, though, that a government would engage in to do exactly what we've been talking about and reinforce the continuity of U.S. positions. So I see it as, frankly, an almost necessary move, because canceling it would have given the appearance that the U.S. is not willing to stand up to its own positions.
Tina Fordham of Fordham Global Foresight. Tina, thank you. We still don't know whether the Speaker of the House will actually visit Taiwan, Tom. On the public itinerary for the Speaker of the House, Nancy Pelosi, it wasn't on it. The latest reporting from CNN indicates it will happen, and I can only offer you the reporting from CNN this morning. She's expected to visit Taiwan as part of their tour of Asia, according to a senior Taiwanese government official and a U.S. official. Tom, within this piece, they go on to say the Taiwanese official added that she is expected to stay in Taiwan overnight. It is unclear when exactly Pelosi will land in Taipei. So, Tom, that's the latest.
The symbolism of this is extraordinary, John, and it really, to me, goes full circle to Nixon-Kissinger, which was a profound shock. Now, let's envision Speaker Pelosi in some kind of moment in Taiwan. All of that will be massively choreographed, I'm sure. But, John, you made a joke earlier about visiting a semiconductor factory. I mean, whether it's a semiconductor factory or it's lunch in Taipei, the answer is this is an extraordinary moment. I thought Tina framed that beautifully.
Futures right now, Tom, down 0.2% on the S&P. The Nasdaq 100, we're down about 0.25%, down 32 points. Shaping up as follows in the bond market after Neil Kashkari spoke over the weekend, pushing back against maybe this dovish interpretation of the Federal Reserve meeting last week. Yield shaping up as follows, up 2 basis points to 266.67, Tom, this morning.
Do speakers matter anymore if there's no forward guidance?
The Fed speakers matter because they're offering you their interpretation of the data, Tom, and what they have to do. This is about the reaction function, and I think this is the point where this Fed, maybe we're going to hear a little bit more about what they think of this market reaction.
We got rid of forward guidance this weekend at the keynotes.
Championship than when you're trying to please investors? Where's the greater pressure?
Oh, I think it's definitely trying to win a championship. It's hard because a lot of, like, when you invest, and you know this, when you're investing, you can control a lot more things. when, you know, on a basketball court, you can't control whether somebody's going to make a shot. You've got to get lucky.
And what's the greater pleasure, making 5 times your money on a distressed debt investment or winning the NBA championship?
They're both fabulous. I wish I could do one each year. That would be great. But I think there's a great feeling in being right on an investment, that you've done a tremendous amount of work and you've made money for your clients, which I think is great. I think winning a championship it's a very surreal feeling because there's a whole city or state that is actually behind you. You know, we had 70,000 people at the finals, and we had them all outside. You had 17,000 in the stands, and then literally like 60,000 people outside. And when we won, like, just the joy that you had brought to the city was phenomenal.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
In a $7 trillion industry, there's a lot of ground to cover.
Prepare for an economic hurricane.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Right now, inflation's job number one.
Data is coming a little bit softer, but I don't think Fed is pivoting here. I don't think the market is pivoting.
Investors should recognize that there's been a lot of ups and downs in the economy in this quite fast-moving cycle.
We have to remember that the market already priced in a lot of damage.
A recession is still the most likely outcome here, and I think it's too early to be calling a bottom in equities.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Coming off the back of the biggest month of gains since November 2020. Live from New York City this morning. Good morning, good morning. For our audience worldwide, this is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Futures down by 0.2% on the S&P. TK, big week ahead for economic data.
Huge week ahead, John. And what's interesting to me is not the jobs report on Friday, but when we get to your property, the real yield Friday afternoon, will we have a negative inflation-adjusted yield? That would be the first shock of August.
Real yields peaked on June 14th. The equity market, the NASDAQ, bottomed 2 days later on June 16th. Does this Fed have to put a little bit more weight back into this bond market?
Well, Ben Lader alluded to that in the last hour. He's been one of the great bulls since his climb on board here as well. I don't think they can overthink that, John. I don't think, I don't know what Chairman Greenspan would say, but do we want a Fed really trying to manipulate the equity markets? I don't think that's productive.
Hasn't that been their job the last 10 years, Tom?
Well, Greenspan would say it's been their job the last 40 years.
Wishful thinking, the words of Bill Dundee this morning in Bloomberg Opinion, Lisa. The wishful thinking is both unfounded and counterproductive.
Okay, perhaps it's not the Fed's job to manipulate markets, but it is their job to use financial conditions as a tool to try to achieve the outcome that they want with respect to inflation. And that is decreased demand, and that is lower valuation. So yes, expect them to jawbone down prices, but will it work? When we've heard this before from different Fed officials, and unless it's from the Fed chair himself, unclear whether it will have the same effect on markets.
When it comes to the data, what's more important right now? This market seems to be focused on output and not inflation, the GDP numbers, and maybe not the ECI last week. And Lisa, that seems to be the direction of travel at the moment.
There is a belief embedded in markets that the Fed already sees the potential of inflation rolling over and is going to adjust accordingly, and that they're going to adjust before that happens, which raises a question of whether it is counterproductive, in Bill Dudley's words, because we ends up prolonging this whole process, this chicken and egg kind of back and forth that's causing much of us to have a headache.
The rally makes it less likely that you can get a rally because they've got to push back.
Head spinning.
I think that's it. Anyway,
exhausting.
futures down 2/10 on the S&P this morning. Good morning to you all. Bramo, annoyed. Futures on the Nasdaq down by 0.2%. Yields up by a couple of basis points. 260, 649. There's some dollar weakness out there, I tell you that. Euro dollar positive, a third of 1%. Lisa, 102.52.
All right, if you want to be bearish, take a look at some of the manufacturing data, particularly out of China, also out of Europe. It has been bleak, particularly in China. The official data coming out showing a contraction in the factory output, and this actually was a surprise to a lot of people, despite the COVID zero. We get the latest read on the U.S. at 10 a.m. I do think it's important. Yes, it is a slower news day when it comes to economic data today than the rest of the week. Still, this is a linchpin in where we are in this cycle. Are we just seeing a rotation to services? Not really, because it's not going to services. We actually are seeing weak data there. Is this factory sector holding up despite some of the weakness that we're seeing in demand on the physical goods? Today, I'm very much focused on the geopolitics here. We were just reporting earlier, John mentioned CNN has it that Nancy Pelosi is going to stop in Taiwan for a night on her trip in Asia. She is currently in Singapore on this trip. How much does this ignite some sort of altercation between China, between the U.S.? What does it mean when China's army comes out and says, slew of energy companies, particularly in the shale patch, Devon Energy, Williams companies, and others, how much do we see shale report record profits, and what do they do with them, John, as this becomes an increasingly political issue? Do they reinvest them? Do they just deliver them to shareholders that have been waiting with losses for a decade?
Exxon and Chevron were not shy about the buybacks last week.
Not at all.
That's all. Lisa, thank you. What a move we've had in July. The biggest month of gains on the S&P going back to November 2020. Off the lows of June, the June 16th closing low on the Nasdaq 100, we have rallied more than 16%. Stuart Kaiser was waiting for that move. The head of equity derivatives research at UBS joins us right now. Stu, is it too early to take a victory lap for you?
Hey, I don't think there's any victory laps in these markets, John. But look, I think the big picture here is expectations just got so extremely low that it didn't take a whole lot to kind of surprise sentiment to the upside, especially given where positioning is. But yeah, I think any victory laps are short-lived these days.
I look, Stuart, at the move we've had. When you synthesize all of UBS research, can you say it is a bull market? Can you say, as we've heard from a number of other guests, optimistic guests like you, that it is a bottom?
Look, I think we do see some room for the market to continue to move higher in August. I don't think I'd call it a bull market.
How do you know when it's a bull market?
I mean, that's a great question. I think for us, we'd like to see some follow through. I think if you look at performance of the equity markets the last 5 months, winners have underperformed losers the following month for 5 consecutive months. So basically, people have been aggressively selling winners, and I think if we could see a little follow through in August, we'd probably see that as incrementally positive. But look, until the Fed seems comfortable that inflation's under control and they're willing to sort of back off a little bit of these hard landing outcomes, I think it's hard to really call for a bull market at this point.
Stuart, understanding technical versus fundamental underpinnings of the rally that we just saw. There was a story that caught my attention on Friday that quants sold a huge amount of their bearish positions. They had to close out over the past few weeks, and that was fueling the rally. How much is that the main factor that's really been driving a market that's been operating in thin liquidity and very uncertain economic outlooks?
Lisa, I think it's actually a pretty big part of it. If you look at the performance of high short interest stocks, they've rallied considerably in July, and I think that's evidence of what you've been seeing on the quant side. But I think that just speaks to a bigger picture, that positioning and sentiment had been so washed out that you got a relatively solid earnings season, certainly not as strong as we've seen the past couple, but a solid earnings season, and the Fed that just sort of stayed on script, so didn't provide an additional negative catalyst into the market, and that's hasn't, to your point, I don't think it's drawn a lot of new investors into the market, but I think it's scared a lot of the shorts out, and that's kind of what we've seen in July.
Stuart, your response to when we tried to give you a victory lap spoke volumes. It was just sort of this exhaustion from this whipsaw action that we've been seeing and the uncertainty. What's your compass when you try to get a gauge of what's to come? Is it the economic data? Is it the prognostications from Fed officials? Or is it the line-by-line reports that we're getting from a lot of companies as they report earnings?
I think right now it's the earnings side of it, just because expectations, especially from the more bearish side of the ledger, have been so negative on earnings. So I think about a 5% upside to EPS has really helped. In terms of the Fed, look, I mean the Fed has a dual mandate, and their view I think has been that the tail risk on the inflation side of their mandate was so far off and so huge that they had to prioritize that, and they front-loaded hikes, and to their credit, market-based inflation expectations have come under control. What they've sacrificed there is they've sort of introduced a tail risk on the growth side of the market. So it's going to be that back and forth between how the Fed is managing, inflation risks in the face of declining growth. And I think the real challenge is going to be, if we see weakness in the labor market, how will the Fed's communication evolve? I think from their perspective right now, the tail risk on the growth side is smaller and further in the future. So they're going to prioritize inflation. As that growth tail risk gets closer, how does that communication evolve? So that's going to be, I think, the number one focus for us as we get through earnings is how the Fed communicates that balance.
Right. I'm asking for a friend, but for people that have missed the equity market completely, I mean, just, the few people that have actually completely missed the equity market, how do you begin to get on board? Do you plunge in? You have such an enthusiasm that you dive in, or is it the proverbial dollar cost average?
We're not in the diving camp at this point. I think if the Fed is focused on growth and is willing to allow hard landing outcomes, I think you need to enter this through higher quality, larger market cap type companies. And I think that's frankly why large cap tech has benefited, because they fall into that category. So for us, it's, I think you want to be careful legging in here. It's hard to recommend to buy value and cyclicals at a time when the Fed seems comfortable, causing a recession. And look, the investor conversation is not if there's a recession, right? It's when and how much. And if that's the case, I think you need to be pretty cautious about how you add risk at this point.
Stuart Kaiser, awesome to catch up with you, as always, here in New York City. Stu, thank you, sir. Looking ahead to the Fed speak tomorrow, we've got Evans, Mester, Bullard, Tom, all on deck, and I imagine we're going to get a ton of it this week from these guys.
I mean, I always want to hear from Dr. Mester. She's just so good on the acuity of the reaction functions, but you got to believe you want to hear from Mr. Bullard to see the urgency for a Fed to focus on inflation until they see disinflation.
Are they satisfied with how Chairman Powell's comments last week were received, Lisa, by this market?
The answer is no. I mean, what did Ben Laidler say? They hate this. The Fed hates this response, and I think that that's an accurate assessment based on everything we've heard. How do they then say the economy is doing okay, but you guys got it wrong? How do they dovetail that message without going too far, without losing credibility and being accurate to the goals of the Fed?
Inflation's at 9%. We've got work to do. Isn't that just the message?
But you know what? That's what Chair Powell said. It didn't work.
Chairman Powell was focused on the output data because that was the line of questioning. I caught up with someone over the weekend that reminded me of that, and I think it's important. The majority of the questions in the news conference were about this recession story, so he had to attack that line of questioning. We didn't actually ask much about inflation, how sticky, how broad this might be going into year end. Then he started to lean on this concept of neutral, which Larry Summers has come out with a bucket of freezing cold water and poured it all over. And Tom, I think that's where maybe you get some pushback in the coming weeks. Larry Summers' argument is a basic one, and I think it resonates with a lot of people. How can we be at neutral when inflation, Tom, is at 9%?
I looked at the inflation chart, John, adjusted back, I think, to 1914 this morning. They have that on the Bloomberg from the U.S. government. And we're in a unique position right now. I mean, it's much, much worse than what we saw with Volcker. And Summers is right about that. The depth of duration here really screams for action.
Looking ahead to payrolls Friday, the estimate so far, 250,000.
I didn't know that, really. That's the number?
The high is 300K from Credit Suisse. Morgan Stanley at 300K as well. Bank of America with Mike Gapin over there now looking for 275. 200 seems to be the ballpark figure that we're looking for, away from the 300s of the last month or so. Futures down 0.2% with Tom Keene, Lisa Abramowitz and Jonathan Ferro from New York City this morning. Good morning. Will the Speaker of the House visit Taiwan? The latest reporting from CNN suggests she might be. We'll catch up with AMH down in D.C. up next.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. China has again warned that its military would take action if House Speaker Nancy Pelosi makes a landmark visit to Taiwan. A spokesman said the People Liberation Army, quote, won't sit idly by if Pelosi travels there. She's currently in Singapore. Pelosi's itinerary did not list Taiwan as a stop. The architect of the Democrats' tax, climate and drugs bill, Senator Joe Manchin, is lobbying colleague Kristen Sinema to get on board. Manchin argues that the measure does not raise taxes. Sinema has not divulged whether she will support the bill or not. She has the power to sink it. And the Bank of England is expected to step up its fight against inflation in the coming week. On Thursday, it's likely to join some other 70 central banks in raising interest rates by a half percentage point. That would be the UK's biggest rate hike in 27 years. And shares of HSBC are rising. Second quarter earnings were better than expected, and the bank promised to resume paying quarterly dividends next year. HSBC is pushing back against a call by its largest shareholder, China's Ping An Insurance, to split up. And Bill Russell is being remembered as the greatest winner in the history of basketball. The Hall of Famer died Sunday. Russell won 11 NBA titles in 13 seasons. He also won 2 NCAA titles at the University of San Francisco and an Olympic gold medal. Bill Russell was 88. Global News 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
The 700th anniversary of Dante Alighieri's death has triggered the work of many institutions and offered a very rich schedule of events. Today in Santa Croce, we present one of these projects that suffered a difficult start because COVID-19 has stopped the project that was shared by the Opera di Santi Croce by the Franciscan community from Florence Municipality and the Fund for Religious Building of the Internal Minister. Today, Felice Limosani's project is finally enjoyable. In the Pazzi Chapel, the marvelous architecture by Filippo Brunelleschi, the most important images from the Divine Comedy created by the French illustrator Gustave Doré. Through these images, we can live the violent emotions of hell, the weight of purgatory, and the sublime joy of paradise.
The digital humanities are a cultural occasion to exploit. Summing up, it's about merging humanistic disciplines with new technologies. I find this to be an innovating and modern tool to update culture. Cultural heritage becomes something to hand over to the new generations and not to be put aside. So it's about using technology, pixels, and binary code with a human and humanizing content.
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management. It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres tonight with replays all weekend on Bloomberg Television and Radio.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars. only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Earnings season is here.
Everything I've read has just got the R word. Resilience, not recession.
Earnings are expected to be so weak that I think that presents a very intriguing opportunity.
Bloomberg breaks the numbers first.
We get a deluge of earnings globally this week from Alphabet and Microsoft,
with exclusive expert analysis.
These earnings have proved to be really inconsistent, not actually showing a real picture that goes one way or another.
Bloomberg Television and Radio, the fastest numbers and analysis you trust.
This is fighting inflation. This is all about the absolute horrible position that people are in now because of the inflation cost, whether it be gasoline, whether it be food pricing, whether it be energy pricing. And it's around energy mostly it's driving these high inflation. This is going to take care of that because this is aggressively producing more energy to get more supply to get the prices down. That's what we're doing.
Senator Manchin over the weekend doing more TV than us, Tom. Every single morning show over the weekend with Senator Manchin of West Virginia. On CBS that was over the weekend. From New York City this morning. Good morning. Tom Keene, Lisa Abramowitz and Jonathan Ferro. Futures down just a touch. We're softer by a little more than 1/10%. No drama here in the market. We're down about 1/10 on the NASDAQ too. Drama potentially in Taiwan. The latest from CNN, if you're just tuning in, here's the lead paragraph from their team. U.S. House Speaker Nancy Pelosi is expected to visit Taiwan, Tom, as part of their tour of Asia, according to senior Taiwanese government official and a U.S. official as well.
It's fascinating. I think we've covered it really well this morning, and we'll continue to do that. Secretary Cohen, William Cohen of Maine, will be with us later here on Surveillance this morning. So right now we will digress. Anne-Marie Horton is watching the Pelosi story, our Bloomberg Washington correspondent. But Anne-Marie, with the Manchin attention that John just mentioned, I think we need to understand a woman who is a young girl, literally lived in an abandoned gas station, picked herself up with 3, 4, and 5 academic degrees, and holds court as a progressive yet moderate Democrat senator of Arizona. Who has to sell to the senator from Arizona, and what is she listening for from her colleague from West Virginia?
Well, I think Senator Manchin went out this weekend to make that case to her explicitly in some of these talk shows he was on of the weekend programming, talking about the fact that her agenda that she's been pushing for, even if she wasn't part of this small huddle, is reflected in this bill. He talked about the fact that she didn't want to raise taxes. He says that this doesn't raise taxes, this closes loopholes. He also really weighed into and leaned into the fact that this would give Medicare really the road to try to negotiate prices lower prescription drugs. This is something that she is very keen for. But we have not yet heard from her office, except for the fact when the bill came out that she said that they will not talk about until they read the text, and also the text needs to be scrubbed by the Senate parliamentarian to make sure there's no non-budgetary items in it. And until that happens, we may not know whether Kyrsten Sinema is a yes on this vote. And this is an issue. This is why you see a little bit of optimism, but cautious optimism from the White House, because they've got burned before, and they need every single senator to sign up for this, or it's not happening.
I mean, Arizona is maybe the one state, Anne-Marie, that I get most wrong. I get it's a Republican state. Good morning, AUH2O. But the answer is, with a booming Phoenix, it's more Democratic. What is her local politics that affects this big national and Washington decision?
Yeah, and Arizona, Tom, key to bring up, because tomorrow they have a primary election, and this is really a fight for the Republican GOP, especially there. But we should note, President Biden did win Arizona, really at the heart, though, of Trump's campaign, saying the election was stolen. Kyrsten Sinema has had a lot of blowback from progressives in Arizona. I mean, you've seen videos circulating on social media last summer when Build Back Better was really in the press, forcing her to sign up for this. But, as you say, she's very moderate, a bit more to the right when it comes to taxes. She does not want to see corporate taxes raised. She's also been against closing the loophole on carried interest.
Yeah.
So this is going to be potentially the key discussion to try to get her on the finish line.
Anne-Marie, I'm just focused on Joe Manchin. I think this is a fascinating story. He's always been sort of a waffling member of the Democratic Party, really getting some ire from some of the more progressive members of the team here. And you do see him being the front runner, even pushing back against a Wharton study that came out and said that this bill, Inflation Relief Bill Act of 2022, would increase marginally inflation to 2024 before reducing it on the margins. How much is this a surprise? What caused the about face for him?
And these are economists that Manchin has been in discussion with in the past. And on CNN, he said, I respectfully disagree. And he pointed to a lot of the investment that will go into the energy space. This is really key for him in West Virginia, especially things like pipelines for LNG. And he says that will end up bringing down prices. So that's why he views this as not inflationary. For Manchin, his team will say this is not a reversal. They've always been engaged. The reason why, he also was explaining why he kept it very small circle with Senator Schumer and only really a few others. I mean, this really sent shockwaves through Washington. Many people that are never really shocked at anything in politics were quite literally shocked that this deal was able to come to fruition. And he said he didn't bring other people in because for so many times he let members of his party down because he couldn't go as far as the progressives wanted him to. And he said we were able now to get a deal. It is not $3.5 trillion. It is $400 billion. And he thinks this is not about spending. This is about investment. But for him, he says it wasn't a reversal, even though he did say he wanted to wait for that next inflation print.
What a turnaround, Anne-Marie. The Democrats like Senator Manchin and Larry Summers all at the same time.
It's crazy.
When did that happen? AMH down in Washington.
100 days out from the midterms. That's when that happened.
Getting closer to those midterms, TK, a few months away.
Yeah, it's what it's all about, and you wonder how the president's going to react to it. It'll be fascinating to see, John, when Matthew has sound on Bloomberg Radio this afternoon, where we are. John, as we speak of Washington, can I note that the real yield will dip down through where it was on July 29th? And possibly will head for a negative statistic.
It's been fading,
about
Tom.
The time of one of your properties.
It's been fading. And your disagreement a little bit earlier with Lisa over what's been driving the equity market, I think we've all got to agree that real yields, where they topped on June 14th, that story and how it's faded over the last 6 weeks has been a big factor behind what's happened in this equity market rally. And a lot of that, Tom, is dependent on just the way the perception of what this Fed will or won't do has shifted over the last few weeks.
So it depends also on, what we see in inflation. And part of inflation coming down is, within a broader sense, a demand destruction, as Ed Morse talked about with oil. And when the prices come up, demand slips away and down you go.
You've said it, though, Tom. Come down to what? From 9 to what? 8, 7, 6, 5?
Well, yeah, that's, we haven't discussed that today, but to me, that's the heart of it. And John, this goes to the important point. Is jobs more important Friday? I mean, today it's no news Monday. I get that. But is jobs more important Friday or August 10, I believe it is, the CPI report?
The labour market, I think, Tom, and Lisa, you can weigh in quickly here too, is going to be seen as to whether it keeps the light green on go, go, go for this Fed, and CPI is going to reinforce that potentially next week as well.
If the labor market comes in hotter than expected, that could actually really spur the markets in the opposite direction, expecting those higher Fed rate hikes. Honestly, Tom, John says it, you don't disagree. I say it, you do. So,
it's ISM Monday.
Period.
It's
What?
ISM Monday.
ISM
Is that what you're
Monday.
calling it?
100%.
seems to have lost interest in waiting around for self-driving cars. I rode in Google's self-driving car in 2011.
Wow.
And I'm still waiting to be able to buy or just ride a self-driving car on demand. Why is it taking so long?
I think in self-driving, first of all, the opportunity is so clear. The reach is so broad. We forgot that big things do start small. We all know how to drive, but we're driving amongst humans, and you have to deal with so many little scenarios. There are so many things that you've been learning about driving since birth. And codifying that using AI, sensors, and computers is turning out to be a lot harder. Last but not least, it's a safety critical system. None of us should deploy until and unless we have closed loop evidence that we're safe.
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management. It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres tonight with replays all weekend on Bloomberg Television and Radio.
Let's whip through this price action for you. From New York City this morning, good morning. After a massive month of gains on the S&P, the biggest month of gains going back to November 2020, we pulled back just a little bit on the S&P 500, down 0.1%. On the NASDAQ 100, down 0.1%. Looking ahead to more economic data, Lisa flagged this, the ISM manufacturing coming out a little bit later today, then on to ISM services. Then we get CPI next week, August 10th, before we get there, payrolls this Friday. This equity market building off the lows of June 16th. This bond market, yields have declined substantially from the highs of June 14th. Yields have gone from, say, close to 350 down to 264 on a 10-year, on a 2-year down to 288. Another part of the bond market that's backed away in a massive way, topped out June 14th, the Italian 10-year yield has gone from close to 420 all the way back in to 294. Now, I can find a lot of bad news out of Europe. Can I just say, Tom, that maybe that is just a little bit of a ray of light, the fact that we haven't got this redenomination risk bubbling away at the same time that that economy is facing very, very real challenges.
Well, the war is really challenging right now, but I do agree, John. There's so much gloom about Europe. You wonder where the glint is going to be, where maybe they get it going. And I really wonder what the tourism effect is in some of those geographies. Every report from the airlines is it's an absolute boom tourism economy.
I've lived it, Tom. Everywhere you go in Italy, an American accent. The why? Yeah. Euro dollar at 102.42. Goldman out this morning, cutting their 3-month target on euro dollar from about 105 down to 99 cents, Tom. They don't think this market still reflects just how much pain that economy is about to go to. Today, at least, though, again, Tom, dollar weakness, 4 days of it now. Euro dollar positive, 0.2%.
There it is, a 105 on DXY. Round that up, maybe a 106. We're watching the 10-year real yield as well.
Much more still to come. That's your cross-asset price action. We need to get you some single names. We can do that with Bramo. Hey, Lisa.
Check it out. It's green. I'm not talking about stocks that are losing. I'm talking about stocks that are gaining, even after reporting earnings. HSBC came out and said that they were going to reinstate their dividends starting next year. They beat expectations, particularly on currency trading. Those shares up 7.4% in the pre-market if you look at the ADRs trading in New York. And then there are a number of acquisitions this morning, or at least planned acquisitions announced, which is interesting considering the slowdown that we've seen in capital markets in both acquisitions and IPOs, not to mention debt sales. Global Payments said that it was going to buy EVO Payments to expand in Europe, to expand in South America. Those shares up nearly 2% after announcing that. And Valvoline, Tom was mentioning this earlier, it said that it was is going to have its petroleum unit acquired by Saudi Aramco for $2.6 billion. How much is this going to be at the beginning of a slew of acquisitions in the energy space, especially because they have that free cash flow? Talking about energy, it is interesting to see that prices are down. Oil prices have come off, especially after that factory output data out of China. ExxonMobil reflecting that, those shares down 0.8%. Devon Energy not. Those shares up 0.6%, even after a monster rally this year. That company set to report earnings after the bell. The expectation is for record shale profits at a time when they have reported for a decade or more losses, disappointments, debt holders that are sitting there wondering whether they're going to get paid back. And Activision Blizzard also out after the bell. The video game maker has already gained 20% year to date. Can they confirm that with a really robust set of projections, even as people start to have more things to do with their time other than sit home and play video games, Tom?
Well, Lisa, thanks so much. Laura Rame joins us right now with FS Investments with a really sharp note about what to watch as we vault into August. Let me take you back to March of the beginning of the pandemic. Claims exploded higher, 5.9 million, I believe that number is. It's a huge statistic, and we've come down to the glory 2 years later of 171,000 with a survey this Thursday of 260,000. Laura, good morning. You say it is the statistic that matters, and you benchmark it at 280,000. How close are we to getting to the RUM 280,000?
I still think we're about a quarter away from getting to a level that much more clearly predicts a recession as defined by the body that really is the arbiter of this, the official referee. Claims typically bottom about 9 to 24 months ahead of a recession, and they bottomed back in March at a very historically low level, but they've been slowly creeping up. And there's a seasonal component to that. I think that's why I'm watching something a little bit higher, more like 280, to try to differentiate between something that's more cyclical and something that's just seasonal.
Does the Fed wait? Is the Fed ex post where they just have to wait for the Laura Rame 280,000, or do they act before?
So they're acting, and I think this is the big question that we saw after Wednesday, right? The markets are now really pricing in rate cuts, and it's caused the Fed funds futures curve to diverge significantly from the dot plot, which I grant you the Fed really has removed their forward guidance piece of this, but I do think that is going to be at the core of Fed speak this week. Fed speakers are looking at the market reaction, and the higher inflation is a game changer. You cannot price in the same Fed that we had in 2018. You can't price the same reaction function. At the first sign of weakness, and we're already seeing that, the Fed's not going to be able to come in and ride to the rescue with rate cuts with the same speed and flexibility that they would have when we have inflation at 2%.
Laura, what's driven you crazier? The recession debate or the interpretation of that meeting last week of this Fed?
I think the recession debate, to me, is really taking the oxygen away from what we really need to be focused on. Because the start date of the recession at the end of the date is really only good for years later when we're comparing it to other recessions. The reality is the economy is weakening. It's probably going to weaken further. Job losses are the hallmark of the classic definition of recession, that or they're a hallmark component of that. And looking forward, there's probably more weakness ahead. And right now, Q3 GDP is actually shaping up to be positive, a small positive, but I think we really need to wait. There's another shoe out there to drop, and it's the jobs. And the Fed probably said that about 10 times, that to them, they're really going to continue to address inflation primarily until they see problem with the jobs.
It's in the first line of the statement. You can see in the first paragraph, they reference the jobs market. Laura, it raises the question, when do you expect to see that weakness bleed into the labor market? Is Friday too soon? Is next month too soon?
Yeah, it is too soon. We've seen this consistent strength. We still have the job openings. It's something that I don't really expect to materialize until the fourth quarter or even early in the first quarter of next year.
Which raises a question, Laura, about whether the dual mandate of the Fed comes into question at that point, whether inflation starts to become less of the obvious goal if the labor market is also struggling. Do you think that when we get there, inflation will have come down significantly to a level where it will be a more comfortable discussion for the Federal Reserve to have?
No, it so much has to go right to get inflation back down to anything close to where the Fed can plant a flag and declare victory. You need either deep energy price deflation, you need rents to turn around, and you need durable goods price deflation. All those three components will be required. And right now, I'm looking at year-end GDP. It's hard to even get it below 7%. My forecast still is around 6%, but that's looking increasingly optimistic with every month where you just get these reports filled with upside surprises and inflation bubbling up from virtually every quarter of the economy. So it's a lot of economic uncertainty over the next year. And this is something that traditional equity markets just haven't wrapped their head around. They're looking at a more classic V-shaped recovery, and I would argue we still haven't hit the bottom of that yet.
Just quickly here, Laura, given the fact that Fed Chair Jay Powell came out and said that we are getting closer to neutral, and that Larry Summers came out and said that that was indefensible, where do you see this idea of neutral kind of evening out?
Their estimates of neutral are so based on their Phillips curve related models, and they really take for granted this deep, durable goods price deflation that we've seen from China. In the face of deglobalization, neutral is likely higher. Their models haven't caught up to that yet. And I think that's what so many of us are sort of pounding the table about. It's going to have to be a higher terminal rate. It may even be 3.5%. But even that, I think, would require a hawkish pivot from where markets are positioning today.
Laura Rain, thank you, of FS Investments. The fact that we're debating whether we have or have not got a recession on our hands at the moment, I think that just tells you we're not in a great place. Connor Sen, the columnist for Bloomberg Opinion, just tweeting me and saying the following, and I think this is a really good way of just wrapping things up. Where their problems stem from is affirming that long-term neutral rates are around 2.5%, which anchors the 10-year yield around that level, which anchors mortgage rates, which supports housing. They're not sure how to make markets do what they want. TK, that's an interesting take from Connor Sen just moments ago.
And what's interesting about it, and I thought Laura was just brilliant on this, absolutely brilliant, was the idea of how do you get the terminal rate up? How do you get the new 2% up near Adam Posen's 3%? And the way you do it on a very coarse basis, a blunt basis, John, is to look at the service inflation dynamic versus the global U.S. goods disinflation dynamic. If you get a little bit of a goods permanency above zero and you get a persistency of service sector inflation, you don't get back to 2%.
Looking ahead to next week on August 10th, these are the numbers so far. We're putting our survey together. As the numbers keep coming in, the median's going to change, but at the moment the estimate is 8.8% headline, down from 9.1. The estimate for core, stripping out food and energy, is 6.2, up from 5.9.
Wow.
And Lisa, as you know, this market will be very focused on the month-over-month core figure, just to get a feel for how sticky, how broad this story is.
The conversation becomes a lot trickier when it's not just the direction of travel, but how quickly inflation is coming down, what the drivers are. This is a level of nuance that we do not understand how it's going to be received in markets.
Nuance these days.
Exactly.
Come on. Futures down a tenth on the S&P. From New York City, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. President Biden is isolating at the White House after testing positive again for COVID. He has a so-called rebound case that is seen in people who takes the antiviral drug Paxlovid. The White House says the president is not experiencing any symptoms. In eastern Kentucky, the death toll from massive flooding has now risen to 28, and the state says more fatalities are expected. Rescue and recovery efforts were slowed Sunday by up to 4 more inches of rain. About 400 people have been rescued by National Guard helicopters. And the outlook for factories around the globe has gotten worse. European factory activity plunged in July, and Asian manufacturing output also continued to weaken. It's being blamed on a slowing economy and those lingering supply chain complications. Now, Saudi Aramco has agreed to buy Valvoline's global products and retail services businesses for more than $2.6 billion in cash. That will let Aramco expand its refining and petrochemicals operations. Valvoline says it will now become what it calls a pure-play automotive service provider. The shares of HSBC are rising. Second quarter earnings were better than expected, and the bank promised to resume paying quarterly dividends next year. HSBC is pushing back a call by its largest shareholder, China's Ping An Insurance, to split up. The black actress who eroded racial stereotypes in the 60s, TV series Star Trek, has died. Nichelle Nichols was 89. Nichols portrayed Lieutenant Uhura in Star Trek and was involved in the first interracial kiss on U.S. network television. At one point, Nichols wanted to quit the show, but civil rights leader Martin Luther King Jr. persuaded her to stay. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
This week on Bloomberg Green, the green energy of the future, how to make clean hydrogen and its benefits for the planet. Flying high, we take a look at the practical uses of green hydrogen as jet fuel.
To hydrogen fuel cell being the best approach from the cost of fuel, efficiency of utilization of the fuel, and the mitigation of the climate effects.
And from a small part of the energy picture to making it available for all. We talk the challenges and opportunities in widening access to green hydrogen.
My biggest dream is to see green hydrogen become mainstream, actually, and not just to have these little pockets of applications or these demos, but for it to really become the fuel of the future.
From Bloomberg's world headquarters in New York, I'm Kaylee Glines, and don't miss the latest edition of Bloomberg Green, airing this weekend on TV, Quick Take, and online.
No one covers the world like Bloomberg.
You have to show action on behalf of the American people, and that's exactly what the president is doing.
The major fault line at this early stage is tax.
For the oil market, this is a big moment to see if the kingdom is willing to step in.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority. In a $7 trillion industry, there's a lot of ground to cover.
Prepare for an economic hurricane.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
The tag on the product may read Made in the USA, but the sign on the CEO's door often says Made in India. Alphabet's Sundar Pichai, Microsoft's Satya Nadella, IBM's Arvind Krishna, Micron Technology's Sanjay Mehrotra, and that's just the start. Add in the chief executives of Adobe, Deloitte, Gap, VMware, and that doesn't count Indians running companies all over the world. Why have so many Indians risen to the top? Vinod Khosla points to India's incredibly competitive education system. If you can survive the pressure it takes to get into one of the Indian institutes of technology, it gives you confidence to handle American universities and later the business world. Meanwhile, the belief in India's ability to produce so many tech wizards is reinforced every year. Indians make up about 3/4 of the immigrants receiving coveted H-1B visas for the U.S., and it's a safe bet that some of them will eventually find their way to the C-suite.
outlook for the Chinese real estate continues to be weak. We're some quarters away from saying we're through the worst of it. So we do think we're going to see some further impairments in the second half on that portfolio. But we're managing it, and in an overall percentage of our overall book, it's very modest.
If HSBC has got some concerns, then maybe we should all have some concerns. Ewan Stevenson there, the HSBC CFO, on the situation in China at the moment. From New York City this morning, good morning. Futures unchanged on the S&P. On the Nasdaq 100, we recover just a little bit, up 0.1%. Yields unchanged at 264.87. You know the approach to Chinese data over the last decade or so. If it's good, it probably isn't. If it's bad, it's much worse. That seems to be the reaction from investors, Tom. 49 was the official manufacturing Purchasing Managers Index. Of course, anything below 50 is in contraction, and that number is in contraction for the month of July.
When do we get the data, John, this morning? 10 a.m., is it?
A little bit later at 10 a.m.
Yeah,
ISM Manufacturing, Tom.
We will look for that as well. Right now, not on Dr. Copper, not on Dr. Gold, Dr. Gupta here on a ratio. Kriti?
Of Dr. Copper versus Dr. Gold. At least that's what I'm looking at when it comes to the impact of that Chinese data that we're seeing. Of course, John just talked about the contraction there. We've actually looked at the sentiment around China. It has been worsening in the last month or so, which brings me to my chart of the day, a Jeff Gundlach favorite. The idea that copper, this kind of growth proxy or global growth proxy, largely driven by Chinese demand relative to gold, the global haven of sorts. And really, we're looking at, folks, at a 3-year time frame going all the way back to 2020, where you see this massive acceleration. The line goes up till 2021, and then kind of stagnates for about a year until June of 2022. So I want to say in the last month or two, where you see this steep decline. Now, a lot of this is coming from China, just given that they're the ones that are driving that global demand. And remember, that growth that you're seeing in China did actually hold up the global economy through the majority of 2020. Now that we're seeing recession calls of Europe and here in the United States as well, it really is China's whim, I would say, that's driving this particular ratio.
Kriti, thank you so much. We have been discussing Asia this morning, a lot of different ideas here on the trip of Speaker Pelosi in Singapore, and CNN saying expected to attend Taiwan. That is not an official announcement. We have to turn to that. Enda Curran joins us now, originally on economics, and of course, our chief Asia economics correspondent. But Enda, I've got to go to the reality, and I guess it's to the romance of Hong Kong. In that olden days, the West would show the flag in the harbor of Hong Kong. It was all a beautiful scene for the movies, and it's gone. What is the linkage of Beijing to the military of China? What is the linkage of President Xi to his Navy as he addresses Speaker Pelosi's possible trip?
Well, those days of courtesy calls to Hong Kong are certainly long gone now, Tom. I think obviously there's heightened tension in this part of the world at the moment, just to see how this visit does play out. You mentioned CNN, Taiwanese media also reporting that Speaker Pelosi will visit Taiwan. We had some hawkish comments today from the Chinese Foreign Ministry in Beijing, daily briefing, saying they wouldn't stand idly by. And then, of course, through the state press, they're also sending out pretty hawkish signals. And one paper, the Global Times former editor, warning about the powder keg that is the Taiwan Straits being threatened. So it is all stacking up now. And of course, quite apart from the political aspect to it, if we do see heightened tensions in this part of the world, there will be an economic spillover. It will have an impact on investor flows, on investor capital, and of course, arguably could also have an impact on China's own recovery too. So I think a lot of eyes are on now just whether or not Speaker Pelosi does go ahead with the visit, and then, of course, the extent of China's response to that.
And on the flip side, how much the economic picture currently in China is playing into its hard line on Taiwan, on the U.S. visit, on military buildup in the region. How can you connect the two, given this incredibly weak data and other signs that it really is an escalation in terms of deteriorating economic growth?
Well, so last December, when China had its big economic conference to plan the year ahead, the kind of theme back then, Lisa, was all about stability for the year ahead. Well, they have had anything but economic stability, at least for this year. We saw that again in the numbers today, like you mentioned, the official PMI, very surprisingly, back in negative territory. Now, that was quite broad-based. The weakness there was across big factories down to small factories, production, new orders, all softening. Not just a story about supply chain disruption, hints there that global demand is coming off. And remember, exports were a big story for China's economic recovery over the last few years. So on the other side of the ledger, we had numbers saying property sales at the top 100 developers today continue to fall
down almost 40%. So you'd have to say, A, the economic story is certainly not going the way the government want. There is a lot of discontent on the ground. We know that through open source social media, for example, the boycotting of paying mortgages to developers who are not building flats is a fairly unprecedented situation in China. So when you look at the economic side of it, you'd say it's not good. Things are not yet stable. The economy is headed in the wrong direction. And when you consider that they're heading into the all-important meeting at the end of this year for President Xi to get its third term, a lot of analysts are saying that it's in the existing government's interest to whip up rhetoric on all fronts, and Taiwan certainly will play into that role.
And to just quickly give us a sense of how much popular support there is for China's trying to clamp down on Taiwan and include it in the mainland.
Always difficult, to be very precise about it, Lisa. But, on social media as one gauge, there's always nationalist rhetoric. These things do get whipped up. The government always says that any kind of slight against China is a slight against the 1.4 billion people of China. But we do know, certainly at the official level, the warnings have been very sharp. The rhetoric has been very hawkish. And as I say to you now, we'll have to see just exactly how they do respond if Speaker Pelosi does go ahead with that visit this week.
What a week in that part of the world. Enda, great work from you as always, buddy. Let's catch up soon, potentially tomorrow. Enda Karen there on the latest. Timing markets is really, really hard. And one of the best individuals at timing the credit market is not even a credit trader or an investor for that matter. He's in the C-suite at Apple. It's Luca Maestri, the CFO. Apple just coming out, Tom, a 4-part debt offering, according to our reporting. And I'm, Tom, looking for a little bit more detail on this. But Apple is very, very, very good at coming to market at just the right time when yields are rolling over.
Well, this is a sport of their share buyback and, of course, dividend increase as well around huge Titanic free cash flow. John, 95% equity, 5% debt. That's actually a pretty big number for a tech company. They've built that out over the years. But with the size of Apple, a market cap of $2.3 gazillion, you got $95 billion in long-term debt, 3.9%. and $25 billion of short-term debt. John, that's almost the same amount as you and me combined.
I wish, Tom. Lisa, Larry McDonald sent me a chart a number of months ago, and it was just a chart of credit interest costs for companies like Apple, and it just plotted the issues from Luca Maestri and the team over at Apple. And guess what? Every single time, pretty much bang on the money.
Yeah, pretty much. They've done a really amazing job at timing the lows in terms of yields, the high in terms of price, in terms of selling debt, which raises a question. Was this rally in credit that we saw in July, which was a monumental rally, the last gasp before something else? Because what you saw was not only did interest rates fall, but so too did credit spreads, did the potential perceived credit risk at a time when people were worried about recession. Is that too good to be true?
Just getting that headline now. Apple kicking off a 4-part bond sale to fund buybacks and dividends. More still to come after a monster rally through the month of July. Here we are kicking off August with futures slightly negative by 0.1%. From New York City, this is Bloomberg.
I think we need to think differently about, being enough. I think, in number of different respects, I think, we're trying to either prove ourselves or do too much. I think we have to realize that, as Black people, despite what society says about us, despite, what happens, we are enough. And so I think going forward in that headspace, I think is really important.
I think the pandemic really highlighted the importance of financial literacy, and in that, you know, it's so important to understand, okay, like how do we budget, how do we plan for, you know, unforeseen circumstances, and really make sure that we're prepared for these events in the future. And through Blackstone Capital, that's why we really place a big emphasis on financial literacy in all forms: budgeting, retirement, investing, etc.
What motivates you guys to do this?
I think it's honestly the impact that we've already seen. It's something that we just want to keep going because we've seen students come in, learn everything that we teach them, and get really successful jobs on Wall Street, really change their trajectory, their career path. And so if we can keep doing that for the next 100 years, that's something that's satisfying for me.
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management. It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres tonight with replays all weekend on Bloomberg Television and Radio. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
We heard a lot of talk of recession. We haven't seen any indication in the results.
We shouldn't obsess over whether there's a recession. We should be thinking about, as investors, what the depth of it might be.
I think the Fed really has no choice. They have to continue to tighten.
I feel like they induced this rally.
We think the Fed declares victory a little earlier. Remember, Paul Volcker did too.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene back all together after a lengthy holiday. So much going on here, but really all of it in the jobs report. Chairman Powell, John, he's looking at the labor economy. We will look at it on Friday.
Payrolls this Friday, looking for something like 250K. A really, really dovish interpretation of what he said last Wednesday, and a ton of pushback from Fed watchers over the last couple of days, including Fed officials. Neil Kashkari going into the weekend, Tom, pretty clear. We've got more work to do.
We got more work to do. So does Apple Computer. There's about 5, 6, 7 stories on a very busy, really interesting Monday here, John. But let's just go to the latest. Apple Computer with free cash flow modeled for next year of $110 billion. They're broke. They need to issue more debt.
Not quite, Tom, but yeah, they're issuing more debt. Full-part debt offering to fund buybacks and dividends. We've seen this work before from the C-suite over at Apple, Tom, and they usually do it. They time it perfectly in this market. Spreads have tightened a lot over the last month. Let's be clear about that. This August, Tom, I wonder what it will bring for this credit market.
Lisa, this is your wheelhouse. What do you see?
I see that people don't understand the rally that we've seen, that they think it's gone too far, too fast. A lot of people would say that. Now we see companies starting to come back to the market after more deals have been pulled from this market. In other words, companies that were planning bond sales and decided not to, going back to the heart of March 2020 of the pandemic, and then before that in 2009. So what we're seeing is a release in markets to allow the likes of Apple to sell bonds, to get this, pay for dividends and share buybacks.
You know, we haven't talked, Lisa, about what is it, John? June 16th, is that where you put the bottom of the market?
That's the low for the NASDAQ. The high for yields was 2 days before that.
I think the Dow bottomed out there about the same time. Lisa, what is high yield and IG done in this great equity bull market?
So high-yield bonds have just posted their biggest rally going back, in decades, right? I mean, it's been an incredible rally because you've had both components working for the market. At what point, though, has it gone too far? If we are heading into a downturn, wouldn't you expect the default risk to increase? Wouldn't you expect people to be more concerned about that? Or is there still a belief that the Fed will cut rates quickly enough to allow this market to continue humming along? And that's really the conundrum underpinning this.
Some of the tensions over the weekend. I got 6 ways to go here, John, before we get to the data. I guess I'm looking at CNN over here on my screen, and they're talking up their news of a Pelosi expected trip to Taiwan. John, we've done a lot on that this week, this morning, Monday, I should say. What are your thoughts on this?
That's the foreign policy story of the moment.
It is.
We can't just focus on the international aspect of China's relationship with the rest of the world. We have to talk about China's relationship with China. The domestic data, Tom, is not great. Sub 50 on the PMI, that's contraction. We know about the mortgage boycott. We're being told it's spreading. We know about what's been happening with COVID-0. That's sticking. What on earth does GDP look like that in that country, Tom? And how concerned are they about social unrest at home, not just unrest abroad?
I agree. I really agree with you, John. As I thought Enda Curran captured that very nicely. It's going to be interesting. The path here, John, November is like tomorrow for President Xi when he's got that party Congress.
I'll tell you what, for November for this market, it's about 10 years away.
It is. It feels
that way.
I'm going to go with the VIX up a stick here. The market pulls back ever so fractionally, recalibrating to the bang-up 6 weeks we've had. John, what do you see?
It's a mild move, Tom. We're down 0.2 on the S&P. On the Nasdaq, we're down a little more than 1/10%. Yields up a basis point to 265.77. And if you wanted to look for some dollar weakness, it's out there across the whole of G10, basically. The euro dollar positive about 0.1% to 102.31. Dollar yen with a sizable move, Tom, 0.6%.
Tony Rodriguez joins us right now. He's had a fixed income strategy at Nuveen. Tony, there's a 60-40 theory in retirement planning. Douglas Cass sent me a great chart this morning that the 60-40 model now is the grimmest it's been over some 30 years. How do you recover in bonds if the 40 of your 60-40's been a disaster?
Well, good morning, Tom, and good to be with you. Probably the best news about the 40 over the first half of the year is that it did a lot better than the 60. So we are beginning to see the fact that investors do need to have fixed income in the portfolio to offset periods like we saw in the first half, where you get equities down double digits, even 20+% when you look at the NASDAQ, for example. Now, as we move forward in fixed income, which also had a pretty rough first half of the year, worst on record, really, we don't think we're going to see those kinds of negative returns, but we do think that it's going to be some rough sledding. We're expecting a little bit modestly higher rates, but we're expecting quite a bit of volatility and probably some more spread widening in the non-treasury sectors of the fixed income market. So there aren't great places to hide, but we do think that fixed income is likely to outperform the equity markets, given that we think this recent rally that we've seen across all risk sectors of the global capital markets is maybe a little bit ahead of itself.
Tony, just how much has inflation protection cheapened in the bond market over the last month or so? And would you tell people that maybe they should have a second look?
Yeah, we have seen break-evens fall. We think that might be, again, a little bit aggressive. So we think that inflation protection is reasonably attractive right now for investors, because we think that the core elements of inflation are going to be stickier than maybe market participants currently expect. So we think that's going to keep the Fed in the game longer than what's currently priced in the Fed funds futures. So our terminal rate would be above what we think what the market is currently pricing. And we think that core inflation will be stickier and more persistent. So that all leads to an environment where fixed income returns will be challenging, volatility will be higher, and recession risk, in our opinion, is quite high as we move into 2023.
Over the past few trading days, the story really has been in that two-year yield. How much yields have come in on the expectation that the Fed will back away from some of their rate hiking path, or as you say, what you think is the incorrect assumption that they could potentially cut rates pretty soon. How bad do you think that the market has this? How badly mistaken are they in terms of how much the two-year yield has come in?
Yeah, well, again, we think that the market is basically pricing in a Fed put, where we think that strike price is well out of the money. When you think about the post global financial crisis, where inflation really wasn't an issue. In fact, deflation was maybe the bigger issue. The Fed put could react quite quickly to weakening economic data. As we sit here today with almost double-digit headline inflation and core inflation that we think is still actually accelerating and will be with us certainly through the remainder of this year, we think that Fed put is out of the money. So the market's being a little bit aggressive, both in terms of risk asset response, but also, as you mentioned, with the 2-year. So we think we'll see a reversal. We think we'll see an increase in the 2-year. The curve will remain inverted and invert further, in our opinion, as we move towards the end of the year.
Over the weekend, I got a lot of hate mail, Tony, from people saying you're ignoring all of the inflation data showing that it's rolling over. You just want to be bearish. You want to say that the Fed's getting it wrong and that the market is priced in too aggressively and easing in conditions. You are seeing signs that inflation is starting to cool. Even in rents, they're not going up as quickly as they did a year ago. However, how much does inflation have to come down to get that Fed put back into play?
So in our view, you would have to see kind of core inflation back pretty close to 4% with a clear trajectory to 3% by the end of 23. And in our mind, where we're looking at core inflation, shelter costs, for example, those have actually been accelerating. If you look at a 1-month annualized, it's faster than a 3-month, which is faster than a 6-month annualized. So we're seeing a decrease in the pace of inflation. We do think it will be stickier. So I think the only way you could square the market response would be for this immaculate disinflation to occur. And in our view, that's going to be delayed. It'll happen, but it's really not until late 23, 24 that we begin to really see some substantial improvement in the core inflation metrics.
How much work does the Fed have to do between now and then? Tony, thank you. Tony Rodriguez there of Nuveen. Bramo, were they handwritten letters or are they emails?
In pencil.
You get handwritten letters. Tom and I get some handwritten hate mail sometimes. We thought you got all the love mail.
I also get hate messages. People think that I'm too
was
bared.
Unaware of that.
Yeah, for sure.
That is not on.
Well, you know, I think that it's interesting that people are seeing this decline in inflation, that there are some inputs that are coming down, but this discussion of how quickly does it have to come down, whether there are stickier elements, and Tony was just talking about rents. You know, the Wall Street Journal just has a story about how nationally average apartment rents have come down a tick to 9.4% in the second quarter of 2022. Yeah, that's down from 11.1% the year before, but really?
This goes back to Tom's number one question, and Tom, I think you're right to keep asking it. What do we come down to? From 9 down to what by year end, and how much work does this Fed need to do in between?
If it's a curve down, it's not linear. Let's say it's a staggering curve down of some form. How many kinks are in the curve? And to me, John, it's 2-part right now. I could change my mind. Where you go from 9 to say 7, easy beans, and then from 7 to whatever, and then the whatever down to wherever we're heading is a complete mystery right now.
Looking ahead to the data this week then, ISM manufacturing later, then tomorrow we get jobs. Job openings might be interesting given what's happening with hiring intentions and job openings at some of the big firms in America right now. Do they start to pull back a little bit more in the way the Fed might actually